Yes, good morning, warriors. We have been discussing about depreciation yesterday. Okay, perfect. Just to remember the depreciation part we have discussed yesterday, we were discussing about the fact that whatever depreciation is given in accounts is not correct and we have to disallow that expenditure. We have to come back and we have to claim depreciation as per Income Tax Act. Income Tax gives it under section 32. Yes, under 32 we discussed what happens in a depreciation. You should be the owner of the asset. You should have an asset. You should put the use to asset and you should not claim depreciation on land and goodwill. Yes, then we started discussing about how to do depreciation. We told there are two methods. One is called as SLM method, one is called as WDV method. SLM is permitted for only power sector undertaking. WDV is permitted for every undertaking. Yes, that is what we discussed yesterday. And then we started discussing the format where we told SLM method you can discuss, you can do it same as accounts. You can do it same as accounts. WDV method Puerto Rico, we was discussing about how the format looks like. We told it is opening WDV plus additions minus sale value of the assets minus sale value of the assets. When we discussed about it, we came and told opening WDV is the closing WDV of last year. Additions we told how to value. We told how to value along with some special scenarios. We told additions Puerto Rico, we have two, more than 180 and less than 180. More than 180 and less than 180. If it is more than 180, you can claim 100% of the rate prescribed. Less than 180, you can claim 50% of the rate prescribed. The rate prescribed is basically buildings 10%, furnitures 10%, plant and machinery 15%, motor vehicles 15%, hired motor vehicles 30%. You have intangible assets of 25%, computers is 40%, books is also 40%. Yes, this is what we learned in yesterday's class. I already elaborated to you why should you take the sale value and not the WDV. Yes. So what you're going to do is in SLM WDV method, you're going to start with opening WDV. You're going to add your additions. You're going to reduce your sale value. You're going to reduce your sale value to arrive at your cost. Cost. Yes. Then you're going to charge depreciation. Depreciation will be 100% for the opening WDV, 100% for the more than 180 days, 50% for less than 180 days, and no depreciation for the balance. I also came and clarified to you that in case you have bought an asset last year, and in case you are putting it to use for less than 180 in the current year, still you will get 100%. Still you will get 100% because it has already reached my block. The moment it has gone to my block, I will automatically claim 100% on the asset. There is one MCQ question around it, so be careful about it. Clear? Yes. Just for a safekeeping, what I generally do is I also give you formulas and shortcuts. So I told you it's 180 days, right? I told you it's 180 days. Actually, if you see, 180 days would come somewhere around 4th October. The fact that you are in a leap year, it will come around 4th October. Meaning, if you put to use an asset 4th October and later, it will come to 179 days. It will come to 179 days in case it becomes less than 180, and so you have to claim 150% depreciation. In simple words, if you have put to use an asset 3rd October and prior, what October? 3rd October and prior, it is called as more than 180. It is called as more than 180. Rahul, do you want me to remember dates and all? Not required. Generally, what I come and say people is, if it is after Gandhi Jayanti, it is less than 180. If it is before Gandhi Jayanti, it is more than 180. The only problem is for your year, there is a leap year coming. For your attempt, there is a leap year coming because 2024 is a leap year. That is why it is not Gandhi Jayanti for you, it is Gandhi Jayanti plus 1. It is Gandhi Jayanti plus 1. The plus 1 is for the leap year. So in exams, you don't have to remember 180 days and all. You can just say, don't write Gandhi Jayanti and all, but just if it is after Gandhi Jayanti, you can assume it as less than 180. If it is before Gandhi Jayanti, you can assume it as more than 180. Claim depreciation accordingly. Yes, just be careful. It is Gandhi Jayanti plus 1 for your attempt. Clear? Awesome. Yes. Now we are in depreciation. We are coming and saying you have to claim 100% on opening WDV, 100% on more than 180, and 50% on less than 180. No depreciation or not put to use. Yes. Question which came is, Rahul, what happened is I am having an asset. The asset is basically like this. What has happened is I am having an opening WDV of 100. I'm having an opening WDV of 100. Current year I made an addition. More than 180 days I did 50. Less than 180 days I did 20. Yes, less than 180 days I did 20. And what happened is I made some sales. Sales is about, let's say, 60. Sales is 60. Now you will find out your cost. Cost is how much? 150 plus 70, 170 minus 60 is 110. Is 110. Yes or no? Yes. Now the question is, you have to charge depreciation. Depreciation will be charged how, Rahul? You will say on opening WDV. Yes or no? Then on more than 180 days, and then on less than 180 days. Yes, assuming this is plant and machinery, rate is 15%. Rate is 15%. Now, opening WDV, what into 15% will come is the question. What into 50% will come? See, I know it is into 15 here. I know it is into 15 here. I know it is into 7.5 here. Yes, I want the numbers. I want the numbers. Help me out with the numbers. What are the numbers? 100. Okay. Huh? 10, no? 50. Okay. 20. Okay. Question to you. Question to you. Notice the numbers. 100, 150 and 20. Total has become 170. What is your asset cost showing? What is your asset cost showing here? 110. When your asset cost is showing 110, can you claim depreciation on 170? Can you claim depreciation on 170? Obviously no, because what you have missed out is you have missed out to remove the sale value. Yes, I told you, you have to reduce the sale value. In this example which you gave me, did you reduce the sale value? Not reduce the sale value. You did not reduce the sale value. The moment you did not reduce the sale value, you are technically coming and telling Rahul, I should charge depreciation only on the cost. Forget the sale value. If you start forgetting the sale value, will your depreciation will remain the same or will come down? It will remain the same. I want depreciation to come down because sale is there. Because sale is there. Yes or no? So 150 and 20 does not seem right. Now you have a question, Rahul, the 60 is come. The 60 has come. From what should I remove 60? From what should I remove 60? Logically, I will come and tell you, Rahul, you should remove 60 from the asset which you sold. 60 can be the addition more than 180 asset. It can be less than 180 asset. It can be opening WDV asset also. Yes or no? Yes. Logically, I will come and tell you, you remove the respective asset. Problem with income tax is income tax led. Do you know the asset? Do you not know the asset? Goes to my block, I forget the asset. Yes. In which case, I don't know where to remove from. I don't know where to remove from. Logical answer will be to do FIFO basis. Logical answer will be to do FIFO basis, which means the 60 will first go from opening, then it will go from more than 180, then it will go for less than 180. In simple words, this is not 100. This is not 100. It is 100 minus 60 into 15%. Now think about it. It is 40 plus 50 plus 20, 90 and 110. Match acha. Yes, understand. Whenever there is a sale happening, you need to reduce the sale for calculating your depreciation. From what should you reduce? Ideally FIFO basis. Ideally FIFO basis. Unless and until question comes and tells you that the asset is from a specific category. If it is from a specific category, you will remove it from that category. If it is not from a specific category, you will directly remove it from opening WDV. Opening WDV. Yes or no? Yes or no? Careful about this. Careful about this. Clear? Clear? Can we go forward? Yes. This is what you need to know when you are charging depreciation. This is what you need to know when you are charging depreciation. Clear? Clear? Yes. Now, these depreciation, let me clarify to you, are called as normal depreciation. What depreciation? Normal depreciation. Appadina enna artham, Rahul? We now have a concept called as additional depreciation. We now have a concept called as additional depreciation. Rahul, what do you mean by additional depreciation? Income tax came and told that, boss, if you are into manufacturing sector, what sector? If you are into manufacturing sector, or you are into power sector, or you are into power sector, the plant and machinery which you use, the plant and machinery which you use will get used more or will get used less? Will get used more, because Rahul, if I am trading sector, will I use my plant and machinery so much? No, I will use it more in my normal manufacturing and power sector. So income tax came and told, boss, if you are having a plant and machinery and a power sector, if you are having a machinery manufacturing or a power sector, the chances of you using your machinery is lot higher. So in the first year alone, to promote you, I will give you something called as additional depreciation. I'll give you something called as additional depreciation. So who is this available to? It is available to my manufacturing and power sector. What is it eligible on? It is eligible on new plant and machinery. What is it eligible on? New plant and machinery. New plant and machinery. What the eligibility? Now, what is the benefit I am giving to you? I am coming and saying, Rahul, if you have a new plant and machinery, if you have a new plant and machinery, the 20% of the cost of machinery, the 20% of the cost of machinery can be claimed in year 1. As additional depreciation. Cost of plant and machinery can be claimed as additional depreciation. How does this work, Rahul? Let's assume that you have asset worth 100 rupees. Depreciation normal rate is 15. So you will initially claim a normal depreciation of 15. Over and above that, you will now claim an additional depreciation of 20. Now, does this mean that my asset can I claim 120%? No, it does not mean that you can claim asset 120%. It is that instead of you claiming this balance 20 over the years, I am giving it to you right away. I am giving it to you right away. So what will happen? Your closing WDV will show 100 minus 15 minus 20. It will show how much? 80, 65. It will show 65. Yes. So what is happening is first year alone I am giving you an accelerated depreciation. First year alone I am giving you an accelerated depreciation. Balance everything will go forward. Balance everything will go forward. Rahul, I am in year 1. I am in year 1. You gave me 15 plus 20. You gave me 15 plus 20. Now I am in year 2, Rahul. I am in year 2. My normal depreciation will be same 15% on 65 number. 15 on 65 number. $9.75. Hey, additional will you get? Not get. Will you get additional? Not get additional. You will not get additional. Rahul, why am I not getting additional? First of all, you have already got it in the first year. You've already got it in the first year. Second of all, it is not new plant and machinery anymore. It is not new plant and machinery anymore. I can only give it to you for the new plant and machinery. The moment you used it in the first year, it automatically became not new. It automatically became not new. Yes or no? Yes. So this is what the provision comes and says. You should be a manufacturing or a power sector claiming new plant and machinery. You should get 20% of the cost of the machinery in the first year. But they are coming and saying, Rahul, assuming I put to use the asset for less than 180 days. I put to use the asset for less than 180 days. Now, in normal depreciation itself, I came and told you, if you put the asset to use for less than, it is what will happen, you will only get 50%. So here also they came and said, Rahul, if you are going to put to use the asset for less than 180 days, you will only get 10% of the cost. You will only get 10% of the cost. Now, same example, what is happening? I bought the asset for 100. I bought the asset for 100. Hey, in year 1, normal depreciation I will get. Assuming I put to use for less than 180 days, normal I will get 7.5. Yes or no? Yes. Additional I will get 10. Additional I will get 10. Yes, total becomes 17.5. Number reduce. What is the number? 82.5. Now, next year you will get again normal. Normal at what rate will you get? Normal at what rate will you get? Normal at what rate will you get? 15%. Yes, so 82.5 minus 15%. Get me the number. 70. Ma, 82.5 into 15, ma. 82.5 into 15%. 12.375. Yes. Next year you will get 12.375. Now, the question which came up is, Rahul, can you claim additional in the next year? Can you claim additional in the next year? Why? Because understand, income tax came and told you that the moment you are doing manufacturing sector, I should give you 20% of accelerated depreciation. Yes. Now what happened is, I only got 10. I only got 10. Did I get the balance 10? No, I did not get the balance 10. So what happened is, I went to the government of India and I went to income tax department and I told them, sir, I was supposed to get 20. You restricted me 10. No problem, sir. Balance 10 I'll claim next year. Balance 10 I'll claim next year. Assessing officer said, no. You cannot claim balance 10 next year because asset is now not new. Asset is now not new. I went to department and came and said, sir, understand, you were supposed to give me 20. You were supposed to give me 20. Just because it is less than 180 does not change the fact that the asset is eligible for 20. You just asked me to claim 10. It still means that balance 10 is eligible. It still means that balance 10 is eligible. What happened? We both went and we fought with the court. We both went and fought with the court. Court said allowed. Court said allowed. Later on, what happened is court said allowed. So income tax department also came and said, yes, what you said is logical. What you said is logical. 2016, they introduced the policy. They introduced the policy where they came and said, if you have claimed only 10% in year 1, if you have claimed only 10% in year 1, you can claim the balance 10% in year 2. You can claim balance 10% in year 2. Yes, so which means next year also I am eligible for additional depreciation. Now the question is, I need to claim 10%. I need to claim 10%. 10% of what, Rahul? 10% of 100 or 10% of 82.5 or 10% of 82.5 minus 12.375. It is 10% of what? It is 10% of the cost. It is 10% of the cost. Income tax is saying that I was supposed to give you 20% of the cost. Instead of giving 20% of the cost fully in year 1, I am giving you 10% of the cost in year 1 and 10% of the cost in year 2. Basically, what I am supposed to give you, I am continuing to give you. I am continuing to give you, just that I am splitting it into 2 and one half I am giving first and second half I am giving next. Yes, you will not do 10% of the WDV, you will do 10% of the cost. Why are you doing 10% of the cost, Rahul? Because you are just deferring your depreciation, which you should have got in year 1. In year 1, you should have got 20. I have taken the 20 and split into 2. I have taken the 20 and split into 2, 10 in year 1 and 10 in year 2. Be extremely careful about this. Additional depreciation is 10% of the cost and not WDV. And not WDV. Yes or no? Yes or no? In your book, please mark this down. It's in page number 42, page number 42, 43. Yes, if you notice, it is 10% in year 2. It is 10% in year 2. If you want, you can put a highlight on this. You can put a highlight on this and somewhere make a note, 10% of cost, not WDV. It is 10% of cost and not WDV. Yes, sir. Yes, sir. Yes. Yes. It is 10% of cost and not WDV. Now, there are certain rules, Rahul. There are certain rules, Rahul. Rule number 1. You can only claim additional depreciation in case you are following WDV method. In case you are following WDV method, which means even if you are a power sector can only claim additional depreciation as long as they follow WDV method. They will not get this if they follow SLM method. They will not get this if they follow SLM method. Rule number 2. I am coming and saying I can claim depreciation only on new plant and machinery. New plant and machinery. Apna enna arthu, Rahul? Let's say for example, current year I have bought a building. Current year I have bought a building. This is a factory building. What building? Factory building. I bought this for 100. I bought this for 100. Our depreciation rate is 10%. Depreciation rate is 10%. So I bought this building in the current year. I will get a normal depreciation of 10. I'll get a normal depreciation of 10. I'll get an additional depreciation of 20% then. What is the number? I'll get additional depreciation of 0. I'll get additional depreciation of 0. Rahul, why 0? Because you can only claim additional depreciation on plant and machinery. The building is a different block. I told you yesterday also. Yes or no? If you notice, building is a separate block. Building is a separate block. You can only claim additional depreciation on plant and machinery, which is only these items. It's only this item. So if you have any kind of furniture, if you have any kind of building, if you have any kind of intangible assets or ships and all, can you claim additional depreciation? No, you can only claim it on plant and machinery. You can only claim it on plant and machinery. Yes or no? Yes. Rahul, I'm going to change the example. I am not having a building. I'm actually having a computer. What am I having? Computer. My normal rate is how much, ma? My normal rate is 40. My normal rate is 40. Rahul, can I claim additional depreciation? Can I claim additional depreciation? Yes, you can claim additional depreciation because it is a part of your plant and machinery block. It is a part of your plant and machinery block. Yes. So question is coming and saying, Rahul, you have a new plant and machinery. How much do you claim additional depreciation? You can only claim it on the plant and machinery. You can only claim it on the plant and machinery. You cannot claim it on building or furniture or intangible assets. You can only claim it on plant and machinery. This is rule number one. Rule number two, they're coming and saying, Rahul, what is new plant and machinery? What is new plant and machinery? They have told new plant and machinery means a plant and machinery which is not. So it's an inclusive, exclusive, or exhaustive? It is an exclusive definition. It's an exclusive definition which says plant and machinery, new plant and machinery means those plant and machinery which is not. Rule number one, second hand machinery. Rule number one, second hand machinery, meaning you should have not purchased someone else's used machinery. You should have not purchased someone else's used machinery. So Rahul has used this machinery, gave it to Gayatri. Can Gayatri claim additional depreciation? No, because it is a second hand machinery. It's a second hand machinery, and the rule comes and says it is second hand even if it is from outside India. Why am I telling this, Rahul? If you remember when we did special tax regime, 115 BAB, there I came and told you should not have more than 20% of used machinery. You should not have more than 20% of used machinery, and I came and told you if you are buying the machinery from outside India, it is considered new. Here it does not apply. Here they are coming and saying if you have bought a machinery from someone who has already used it, whether he used it in India or he used it in foreign, it doesn't matter. Both are not eligible. Yes. So what am I talking about? I'm talking about second hand machinery which is either used in India or outside India. In the whole Income Tax Act, this section is the only section where a foreign asset is becoming used asset. In any other law, in any other section, you will see that the moment it is a foreign asset, you will always assume it as new asset. So be extremely careful. In this section alone, even if you have bought an asset from a foreigner who has used it outside India, it will be considered as a second hand machinery and not be eligible for additional depreciation. So they are telling rule number one, it should not be an asset used in India or outside India. Rule number two, I'm coming and saying it should not be an asset which you have installed in your office premises. What premises? Office premises. Rahul, it should be installed in a factory. Rahul, I installed it in my office premises. Hey, if you have installed it in office premises, this is as good as an admin asset. Do you think you are using it for manufacturing? Not using it for manufacturing. You are not using it for manufacturing. So should I give you additional depreciation? No. Therefore, rule number two, they said do not claim any additional depreciation on assets which are installed in office. Yes. Rule number three, income tax is coming and saying, Rahul, I do not like motor vehicles. So any motor vehicles are not eligible for additional depreciation. Why are they not eligible, Rahul? Because they are not going to be inside the factory. You'll use motor vehicles on the factory or on the road? You'll use it on the road. You will only use it for transportation purpose or personal travel. Yes or no? Does it have any link to your manufacturing? No. Therefore, it is not eligible. There is only one asset which is eligible. We call it as forklift. What lift? Forklift. Do you know what is forklift? Forklift, if you have gone to a factory and all, you will notice in a factory you will have this yellow color or product yellow color vehicle and the vehicle there will be one fork. That fork will help you lift the cartons. Yes, let me show it to you. Have you seen this? Yes, this is called as a forklift. Now, what is this forklift, Rahul? If you notice, this forklift will only be there inside the factory, or will it run on the road also? Will it be used in the factory or will it run on the road also? It will be used only in the factory, which means this is helping you in your manufacturing process. manufacturing process. So can you claim depreciation additionally on this? Yes, Rahul. Yes, Rahul. You can only not claim the additional depreciation on motor vehicles as such. You can claim it on forklift. You can claim it on forklift. Last item they are saying, Rahul, any asset on which you are eligible for 100% depreciation. Any asset on which you are eligible for 100% depreciation. In income tax, normal highest rate is 40. Normal highest rate is 40. But if you are using this asset for specific business or you are using it for scientific research, you will get 100% deduction. Those assets cannot claim. Those assets cannot claim because anyway you have got 100% deduction. Idik mela what will you get? Yes or no? Yes. So they said any kind of asset on which you can claim 100% deduction, also not eligible. Also not eligible. I told you 4 items. Item number 1, second-hand machinery. Item number 2, any machinery used in office premises. Item number 3, any kind of motor vehicles except for forklift. Item number 4, very good, plant and machinery on which 100% deduction is claimed. See, new plant and machinery excludes any kind of plant and machine which is used in India or outside India. Please take out your highlighter pen. In that highlighter pen, please mark this outside India. Please mark the outside India. You are not eligible for an asset used outside India as well. You are not eligible for asset used outside India as well. Only in this section. Only in this section. In any other section, you are eligible. In any other section, you are eligible. Next, plant and machinery installed in office premises, residential accommodation or guest house, because they're not going to be used for manufacturing process. Then I said office appliances. Office appliances because again it is going to be installed in office. Then any kind of ships, aircrafts, road transport vehicles and all, because they are outside the factory, except for forklift. Last item, any kind of plant and machinery on which you can claim 100% deduction. I've clarified it on the bottom where I'm coming and saying additional depreciation is allowed only once in the year in which it is first put to use. Next year it will become an old machinery, therefore you cannot claim additional depreciation except the scenario of less than 180. Except in the scenario of less than 180, because less than 180 you are carry forwarding the first year 10% to the next year. Carry forwarding first year 10% to the next year. Second, I'm saying items like 40% depreciation like computers and windmills are also eligible. As long as they are used inside the factory premises. No deduction if asset is acquired but not installed in the previous year. You can claim the deduction in the year of installment. In simple words, you can only claim it in the year in which it is first put to use. If I bought the machinery today, Rahul, and I used it in the next year, and I put to use in the next year, I can claim the additional depreciation fully in the next year. Yes or no? Yes. This is your provisions of depreciation. Can we go forward? Yes. I'm going to put some special scenarios to you. Let me know how it works. Yes, Ritanya. They don't consider it like a new asset. Correct. Yeah. So when you are a non-resident, which you are going to so understand, ma, that was a scenario where you were a non-resident bringing your own asset into India for use in India. Okay. This is a scenario where you are purchasing it from some non-resident. Okay. So the transaction itself is very different. There, I am having a business outside India and I am bringing that asset into India for doing my business in India. So the ownership has not changed. Here is a scenario where the ownership is changing. Right? So that's a complete different game altogether. Okay. Now, coming to depreciation, I have some special scenarios. Special scenario number 1. If part used for personal purpose. What purpose? Part used for personal purpose. Basically what is happening is I have an asset and I have made a decision that I will use this asset 50% for business, 50% for personal. 50% for business and 50% for personal. Now I bought this asset for 1 lakh. Assuming 15% is the depreciation. Can you claim the whole 15%, Rahul? Can you claim the whole 15%? No, because because you have used the asset 50% for business and 50% for personal. Yes or no? Yes. In which case income tax comes and says that, Rahul, if you want to claim depreciation, first to find out the depreciation, which is 15,000. First to find out the depreciation, which is 15,000. Tell me how much of this asset did you use for business and how much of the asset did you use for personal. I said, Rahul, 50% I use for business, which means 7,500 is what I will get as a deduction, which is 7,500 I will not get as a deduction, which is 7,500 I will not get a deduction. Simple straightforward rule. This is given under section 38. This is given under section 38, which comes and says when an asset is used partly for business and partly for personal, to the extent of the personal you cannot claim the deduction, you can only claim it for business. Yes. No, the question is not that. The question which then came is, Rahul, I am going to the next year now. I am going to year 2. In year 2 I have to claim depreciation once again. Yes. Now for claiming depreciation on year 2, I am following WDV method. So which means I need to do 15% of something. I need to do 15% of WDV. Yes. The question is, Rahul, what is the WDV? Is the WDV 85,000 or is the WDV 92,500? Or is the WDV 92,500? Now, why am I asking you this? Understand. Technically, you use the machinery fully. Yes or no? You use the machinery fully for the full 15%. In which 50% was for business, for 50% was for personal. But at the end of the day, business asset was used. So one school of thought will come and say, Rahul, I should do 85. I should do depreciation only on 85. The second school of thought will come and say, Rahul, in my Pgbp, I only claimed a deduction of 7,500. I never claimed a deduction of 7,500. Yes, I only claimed deduction of first 7,500. I did not claim deduction of second 7,500. So I got an expense of only 7,500. So my WDV is only 1 lakh minus 77,500, which is 92,500. So I should get depreciation on 92,500. So one school of thought is saying 85, one school of thought is saying 92,500 in the next year. Which one is right, Rahul? According to you, which one is right? According to you, which one is right? According to you, which one is right? 90, 85. Why? Because you feel that the asset is used. Now, whether it is used for personal or business, it doesn't matter. At the end of the day, the asset is used. So, therefore, you should give full 15,000. You should disallow 7,500 so that next year you only claim depreciation on 85. Yes, logically, yes. Unfortunately, what happened is when income tax was being drafted, they drafted it very wrong. The section comes and says closing WDV means the gross cost. What is gross cost, ma? The opening plus additions minus sale. Gross cost minus depreciation actually claimed. What happened is when income tax was being drafted, in the draft left, by mistakenly what they did is they put it as gross cost minus depreciation actually claimed. Now you have only claimed 7,500, so you can only reduce 7,500. If you think about it logically, because you have only reduced 7,500, your WDV is showing 92,500. Next year you will claim depreciation on 92,500. Other next year you will claim depreciation on the return on value. Again, return on value. Technically, what will happen? You will end up claiming depreciation on the full 1 lakh. Yes or no? Technically, you will end up claiming depreciation on the full 1 lakh, whereas in that 1 lakh, 50% was always going to be used for business. Personal, 50% was always going to be used for personal. So think about it, no? Even though the asset is costing 1 lakh, in which 50% of the asset is always used for personal purpose, in business you ended up claiming the whole 1 lakh. In business you ended up claiming the whole 1 lakh. It is nothing else, just a poor drafting of law. Just a poor drafting of law. And income tax, ICA also recognizes this drafting. ICA also recognizes this drafting. ICA also came and said, yes, there is a mistake. There is a mistake, but this is what the law says, so I am also going to follow the law. I am also going to follow the law. So what happened is, in your materials, ICA has also come and told you should do 1 lakh minus 7,500, claim on 92,500. Claim on 92,500. Now, Rahul, in practical world, how will it work out? In practical world, how will it work out? Unfortunately, what will happen in practical world, you will get depreciation only on 85,000. You will get depreciation only on 85,000, because what happens is, in your ITR 6, your ITR, no, income tax return. In income tax return, what happens is, in income tax return, the act will come and ask you how much is the total depreciation. Out of this depreciation, how much is pertaining to personal? How much is pertaining to personal? The moment you say my total depreciation is 15, out of which 7,500 pertains to personal, what will happen? Income tax, the ITR 6 will come and say, okay, personal disallowed, WDV will be 85,000. WDV will be 85,000. The ITR 6 does not permit your 92,500. ITR 6 only permits 85,000. If ITR 6 is permitting 85,000, next year carry forward will only be 85,000. So next year you will also claim on 85,000. So practical world, people do not claim the 7,500. People do not claim the 7,500. It goes as a permanent loss. It goes as a permanent loss. But in Income Tax Act, it is given as you can claim only 7,500 and you can claim the higher number. You can claim the higher number. Rahul, ITR 6, I want to violate and I want to claim as per Act. Can you do it? Yes, you can do it, because understand, ITR 6 comes from rules Act. It comes from rules. Rules are prepared by CBDT. Act is prepared by legislature. Legislature is superior or CBDT is superior? Legislature is superior. In that case, Rahul, can I ignore what ITR 6 says and can I do it as per my provisions? Yes, you can do it. But will you get it easily? No. Income tax will obviously disallow it. Income tax will obviously disallow it. You will have to go and fight it in appeal. Okay. So if you are having the appetite to go and fight an appeal, try it out. Try it out. Otherwise, you will not get the deduction. You will not get the deduction. Yes or no? Yes. So in your thing, you have to be careful about it. As per your study material, you need to reduce only 7,500 and claim depreciation on full 92,500. On full 92,500. Clear? Clear? Careful about it. Careful about it. We call it as part personal and part business. Part personal and part business. Can we go forward? Can we go forward? Yes. Special scenario number 2. Composite asset. What asset? Composite asset. Rahul, what is composite asset? If you remember, last few classes back we did agriculture income. Yes. Now what is happening is, Rahul, I am into tea business. I am into tea business. So what happened is, my tea business is totally earning an income of 100. Yes. In this total income earning of 100, I actually used assets. Yes or no? I actually used assets. So what happened is, I had used assets worth 5,000. 5,000 adhik macha 500 vachiko. I used assets worth 500. Yes, this is a building. What is it? It is a building. Now building is eligible for 10%. So I was eligible for a depreciation of 50. So I brought that 50 here. I brought that 50 here. The moment I brought that 50, my Pgbp income became 50. My Pgbp income became 50. Yes. Now, if you remember the provisions of agriculture income, I told you that moment you are in tea business, the moment you are in tea business, what will happen? It will be split into 40 and 60. So what happened? I split into 40 and I split into 60. Numbers are 30 and 20. Yes or no? Now, which one is agriculture, Rahul? 20 is agriculture or 30 is agriculture? 30 is agriculture income. This is business income. Yes or no? Yes. Now, the question which then came up to department is, next year I need to claim again depreciation. Next year I need to claim again depreciation. Will I claim depreciation on 450? Will I claim depreciation on 450 or not? Yes. Why this question has come up, Rahul, is because notice 50 is what you claimed as a deduction. 50 is what you claimed as a deduction. In that 50, what happened? 40% went to business, 30% went to agriculture. And you know agriculture is exempt. This became taxable. Agriculture is exempt and that balance became taxable. So what happened is, scholars of India came and said, dear sir, understand, how did this 30 come? How did this 30 come? You actually split 100 also into 40 and 60. Yes, and then you split the 50 into 40 and 60. How much? 50 into 40% is how much? 20 and 30. Technically, if you think about it, my agriculture income was 60 minus 30. Yes or no? And my business income was 40 minus 20. Yes. Now, my agriculture income is exempt. My agriculture income is exempt. So, therefore, this 60 was exempt. The 60 was exempt, but with the 60 also, the 30 also became exempt. Yes or no? With the 60, the 30 also became exempt. So what happened is, scholars of India came and said, think about it. Technically, sir, the 30 you did not give me a deduction itself. The 30 you did not give me a deduction itself, because the moment you called it as an agriculture income, I lost the deduction. I lost the deduction. So you should actually not reduce 50, sir. You should actually not reduce 50, sir. For me, in my Pgbp, I only got 20 as a deduction, because balance 30 went into agriculture. Because balance 10 went into agriculture, I did not get the deduction itself. Therefore, I only got a deduction for the 20. I only got a deduction for the 20. So technically, you should not reduce 50 for me. You should only reduce 20 for me, and therefore my asset should show 480. Therefore, my asset should show 480. This is what the contention which came. This is what the contention which came, where they are coming and saying that, sir, actually speaking, while you did give me depreciation of 50, in the depreciation of 50, 30 actually went to agriculture. So I never got the deduction. I only got the deduction for 20. I only got the deduction for 20. So therefore, I only want to reduce 20. I only want to reduce 20. Now tell me which is right, 50 or 20? Should you reduce 50 or 20? 20. Why? Using the same special scenario number 1, the logic would be that I got only 7,500 in the first scenario, so I should get a reduction of only 7,500. Here also I got only 20, so I should get only 20. Correct or not? Yes, this is again went to courts. This again went to courts, where all the courts decided that you should get 20. You should get only 20. You should be able to claim depreciation on 480. You should get depreciation on 480. But income tax department asked a simple question. Income tax department asked a simple question. Actually speaking, in your books, how much did you reduce? You reduced 50. In that 50 only, you split into 40 and 60%. 40 and 60%. Yes or no? Yes or no? Now, think about it. This machinery which you have, this machinery which you had, did it help you in the agriculture industry, or did it help you in the factory industry? Did it help you in the agriculture industry, or did it help you in the factory industry? Did you buy that machinery for doing in agriculture, or did you buy it for factory? I bought it for factory. So technically speaking, this depreciation was fully pertaining to my factory. Yes or no? It was fully pertaining to my factory. Yes or no? Yes or no? Income tax came and said, boss, understand, I told you agriculture income is not exempt. I am exempting it because state is asking taxes. At the end of the day, whether you call it agriculture income or you call it business income, both are your business. Both are your business. You have tried to claim depreciation on your business. It's just that a part of the business I'm giving to state, and a part of the business I'm keeping with myself, and a part of the business I'm keeping it with myself. Does not change the fact that it is still business. Does not change the fact that it is still business. So I do not want to give you only 20 as a deduction. I want to reduce the whole 50. I want to reduce the whole 50. So what happened is, Income Tax Act brought an explanation. Income Tax Act brought an explanation. In the explanation, they came and said, in case you are going to use an asset in a composite business scheme, meaning it is going to be used for agricultural operations also, whatever is the actual depreciation you put in your PGBP, whatever is the actual depreciation which you put in your PGBP is the depreciation I will reduce, ignoring the fact that some depreciation might go to agriculture also, which means in this scenario I need to reduce how much, Rahul? I need to reduce 50. I need to reduce 50. Yes or no? Yes. In exam, Rahul, this is confusing. Rahul, because in exam, here you are putting 7,500, here you are putting 50. How to remember, Rahul? Simple. When you prepare your PGBP statement, the number you put there, put it off directly. Think about it. Now, when you were preparing your PGBP statement, in the PGBP statement, when it was personal nature, you would have only claimed 7,500, so you reduced 7,500. In your PGBP statement, you would have actually claimed 50. 50 claim பண்ணதுக்கு அப்புறம் கீழ PGBP you split into 40 and 60. Yes or no? Actually speaking, how much did you put in your PGBP statement? You put 50. So reduce of 50. In simple words, reduce what is claimed as a deduction in your PGBP statement. Yes. I'm going to give you an example, help me out. I have an asset worth 5 lakhs. I am into coffee business. What business? Coffee business. And I am in the forward business. That 4 words, no? Grown, cured, all those 4 words. Yes. So I am in the forward business. I am in the forward coffee business. I have an asset worth 5 lakhs. This asset, actually speaking, I am 25% of it using it for personal. And 75% of it is used for the factory and agriculture. %70% of it is going for factory and agriculture. My current year PGBP is 50 lakhs. I want you to tell me what is the depreciation I will claim, what is the depreciation to be reduced from closing WDV, and what is the final PGBP income. Help me out. How to do it? My PGBP income is 50 lakhs. I need to claim depreciation. Yes or no? I need to claim depreciation. Now, since I have not told you what asset it is, the assumption is it is plant and machinery. If it is plant and machinery, I will claim 15% of 5 lakhs. Yes or no? Number is 75,000. Rahul, can I claim the whole 75,000? No, because 25% is going to personal. So remove 25%. I can only claim 75%. Number is 56,250. Can I claim the whole 56,250, Rahul? Yes, because I am going to split into agriculture and business after all this gets over. So I'm going to reduce the whole 56,250 minus number will become 4,44,750. 43 or 44? 43,750. 43,750. Now, Rahul, is this my PGBP income? No. I need to split this into business and agriculture. Ratio is 40-60. So ratio is 40, ratio is 60. Numbers. Sorry, ma, come again.
PGBP income is 15 lakhs.
15 lakhs, huh? 50 lakh. Oh, acha, sorry. Ma, 50 minus 56, ma. How much is the number? It is 49 lakh 43,000, huh? 750. Okay, great. Yes, split into 40 and 60, which is 19. Okay, 19 lakhs 77,500. 29 lakh 66,250. Yes. Now, what is your PGB income on which you will pay tax? 1977,500. Yes. This is what your computation is. This is what your computation is. Yes. I asked you two questions. Question number one, how much is my PGBP income? I told 1977,500. Second question, I asked you, what is my WDV for the current year? Yes. My opening block was 0. My addition is, I took an asset of 5 lakhs. Huh? I took an asset of 5 lakhs. Did I make any sale? No, I did not make any sale. So therefore, this is my gross cost. This is my gross cost. Now I need to claim depreciation. Rahul, what is the number which I'll claim depreciation? I told you directly the number which you have put in the PGBP statement. Take off that number. Which means this number will become my depreciation, which is 56,250. Therefore, number will become 4,43,750. Yes. How this 56,000, Rahul? Understand, 75,000 is what you are supposed to claim as per composite rules. But in that 75,000, 75% is for personal, so I don't have to reduce personal. I have satisfied both the sections. I have reduced the whole 75,000 also, but I have removed the personal part. So therefore, it becomes 56,250. 56,250. Clear? Not clear? Clear? This is how you do it. Check it once again and let me know if you understand.
Agriculture and business incomes, we have to just directly
Take the actual depreciation fully. If agriculture and business comes, take the actual depreciation fully. If there is any personal nature items, you can take remove the personal item alone.
Personal can be either ways, right, sir? It can be the part of the asset is used for personal and business, or partly during the year it is used for personal and business. Time based is.
See, if you technically ask me, I don't understand how can a part of the asset be used for personal. Okay, it can only be on a time period model. Okay, because having one asset, using that asset partly for business and partly for personal does not really make sense. I don't practically know how it will work out. Okay, the logic which when someone talks about business and personal is that I am talking about a certain time period, which means some period I used it for personal, some period I used it for business. You may, let's assume this example that you have a building, okay, and you've made a decision that in the building first floor will be used by your business premises and second floor will be used by a personal purpose. Yes, in that case it will be a part proportional also. Okay, in that case you will take the whole building and 50% of it will go to personal, 50% of it will go to business forever. I think either way works. That's possible, maybe. Okay, if you have understood this, please note down this example quickly so that we can move forward. Note down the example quickly and move forward. What we can do is you can note down the example, tear this page off and stick it into your concept book. There is one page, I'll tell you. In that page, if you stick it off, it will be easier for you. Yes, in the example, this line is only important, ma. The dotted line which you see, the dotted line is only important. The point is what you need to reduce is the actual value you're showing in your PGBP statement. That's all is the idea. Okay, dotted line மட்டும் ஞாபகம் வச்சா போறோம். Yes, can we go forward? Yes, perfect. Scenario number 3. Special scenario number 3. What is the special scenario number 3, Rahul? We are talking about business reorganization. What are we talking about? We're talking about business reorganization. What do you mean by business reorganization, people? We're talking about amalgamation, demerger, and all those cases. Yes. Now the issue which has happened, no, Rahul, is that there was a person called A. There was a person called A. Okay. Now he had an asset in his hand. He had an asset in his hand. The asset was worth 3 lakhs. The asset was worth 3 lakhs. Now he was running this business properly. He was running this business properly from 1st April to 30th September. What period? 1st April to 30th September. Then what happened is on 30th September, he decided to amalgamate the business. So what happened is he entered into an agreement with AB Limited. He entered into an agreement with B Limited in order to create a company called AB Limited. The moment the AB Limited was created, what happened? This 3 lakh worth of asset was moved to AB Limited, and from that period, from 1st October to 31st March, AB Limited was the owner of this asset. Now the question which then came up is, Rahul, this 3 lakh worth of asset is now used by two people. How do I give depreciation to each person? Because when A is going to give it to B, when A is going to give it to AB, A has to close his books also, because A is going to get liquidated. So A has to pay his taxes before he gives to AB, yes or no? Yes. So what happened is, I need to now split the depreciation into A and AB, so that A can determine his profits correctly and AB can determine his profits correctly. Yes. How do I split, Rahul? Income tax said, boss, make life simple. Don't come and do this accounts proportion and all. Doesn't work for me. Okay, don't come and say 1,439 and all, and then do used for less than 180 days, so 50% used for more. Assume that there is only one person alive. Who is this one person? The one person is AB. Assume that AB is alive. If AB was alive, current year I would have claimed a depreciation of 3 lakh into 15%. Yes. So what I'm saying is, do one thing, claim depreciation of 3 lakh into 15%. What is the number? 45,000. Then come and tell me, for what period did A Limited have the asset and for what period did AB Limited have the asset? How much is the period, ma? April, May, June, July, August, September. 6 months. So 6 months A Limited had it. 6 months AB Limited had it. Take the 45,000. 6 months depreciation will go to A Limited. 6 months depreciation will go to AB Limited. Which means 22,500 will be claimed as a deduction by A and 22,500 will be claimed as a deduction by B. Simple, straightforward method. Yes, what they're saying is, if at all there is a business reorganization happening, whatever depreciation you could have claimed for the whole year, find out the whole number, and then split it between A and AB in the proportion of the days for which the asset was held by them. Now, in this case, I have made it very clear that you started the asset on 1st April and you ended the asset on 30th September. Immediately next day, 1st October, AB started using it. This is a very hypothetical scenario. Assuming what happened is, AB Limited had used this asset not from 1st October, but had used it from 11th October. In that case, what you will have to do is, you will have to not do depreciation for 365 days, because understand, asset was not there for 365 days. Yes. So what you will do is, you will find out the whole 45,000. And then you will try to find out for how many number of days did A have it and for how many number of days did AB have it. How many days did A have it, ma? April 30 days. Then May is 31. June is 30. July is 31. August is 31. September is 30. How much period did AB have it? 21 days. Yes, no, October. October 21 days. November is 30 days. December is 31. January is 31. Since you are in leap year, February is 29. March is 31. Total the numbers. 180, 183 la. Okay, second one. 173, yeah. Okay. 173. Yes. So I am telling that this asset in the current year was used for 183 plus 173, which means totally 356 days. It was used for 356 days. In which case, what I will do is I will take the 45,000 and I will split it into A and AB based on the number of days. Based on the number of days. In first case, it will be for A limited, it will be 183 by 356, and for AB it will be 173 by 356. 173 by 356. Yes or no? Yes or no? I don't want the numbers. I just want you to understand. I just want you to understand. What am I doing, Rahul? In simple words, I am finding out the depreciation for the whole year. I am finding out the depreciation of the whole year, and then I am giving the depreciation to both of those persons depending on the number of days they have used the asset. Depending on the number of days they have used the asset. Don't proportion it using the whole year. Don't proportion it using the whole year. Proportion it using the number of days both the people have utilized. Both the people have utilized. While the asset was there for the whole 366 days, 11 days there is a gap. 11 days there is a gap because AB Limited did not use the asset. So that 11 days will also not be considered. So you will proportion not basis the whole year. You will proportion basis the number of days. But depreciation will be calculated for whole year. Depreciation will be calculated for whole year. Yes or no? Yes. I have an example in my book. Let's do that example. Let's do that example. See the example. It says, if an asset was acquired and put to use by A Limited on 1st November, by AB Limited on 1st November. Question to you. The moment the asset is being put to use on 1st November, asset, you will get 50% depreciation or 100% depreciation? You will get only 50% depreciation. Keep that in mind. I am saying that there is an asset worth 14.4 lakhs. That asset has been put to use for less than 180 days. Put to use for less than 180 days. Subsequently, AB Limited was amalgamated with B Limited on 1st January. From 1st January. So, B is going to use this asset from January. A has used this asset from November to December. Correct or not? November to December. I am asking you to compute the depreciation. What will I do? I'll come and say that there is an asset called 14.4 lakhs. There is an asset for 14.4 lakhs. This asset will, ignoring the amalgamation, do depreciation for the whole year. Depreciation for the whole year will be into 15% into 50%. Why, Rahul, 50%? Because asset was put to use for less than 180 days. Number is 1,08,000. Huh? Number is 1,08,000. Now I will come and ask you, tell me for how much days did A use it, for how much days did B use it. A used it for November and December, which means 30 plus 31, which is 61 days. B Limited used it from Jan to March, which means 31 plus 29 plus 31, number 91, which means this asset in the current year was put to use for 152 days. 152 days. What will you do? You will take the 1,08,000 into 91 by, into 61 by 152, and 91 by 152. 91 by 152. Number is 43,342 and 64,650. So A Limited will claim a deduction of 43,342. B Limited will claim a deduction of 64,658. Yes or no? Yes. This is how you do it in a case of reorganization. In case of a reorganization, you will compute the depreciation for the whole year and then proportionate the depreciation to each of the persons depending on the number of days they were putting to use. Number of days they were putting to use. Clear? What two conditions? That is to be checked. Correct. What I'm doing is I'm ignoring the amalgamation and first computing depreciation as it would have been, Then I'm bringing the amalgamation and I'm saying I'm splitting it basis the number of days. I'm splitting it basis the number of days. Yes or no? Yes. This is the computation. Check and let me know if you understand. Check and let me know if you understand. Only the depreciation, exactly.
Directly on, if you split the cost, it's the same answer.
How would you split the cost, Maritanya?
Split based on that.
So my question is the asset being used parallelly by both the entities, or is the asset being used first by one person and second by another person? If you directly end up splitting the cost, you are basically coming and telling there are two people alive who are eligible for both the assets parallelly. Are you eligible for both the assets parallelly or not? So you need to always split the depreciation and then do it. Okay. The second reason why I'm not recommending that model is because you are at that point of time coming and saying you're trying to proportionate the cost. But what if the asset was put to use for less than 180 days? Right? In that case, if you first split it basis time period, you don't know whether you should charge 15% or 7.5%. Technically, what you're doing is what I'm only doing. Okay, just that you are only trying to do it directly on the cost itself. I'm doing it on the depreciation. At the end of the day, you need to keep in mind that you have to give only 50% depreciation for the whole year because the asset is put to use for less than 180 days. And when you're doing that, you are only considering A in mind and doing it. You're not considering B in mind and doing it. Yes or no? So it's always better to do it this way. All right. All right. Yes. Perfect. This is your depreciation. This is your depreciation, where we have now completed how depreciation looks like. We have told depreciation like you have methods of depreciation, how to calculate the percentage of depreciation, what happens in case of additional depreciation, what are the methods of depreciation, and then we told what is the format for depreciation, and then we did some special scenarios where we came and said if you are using the asset for part personal and part business is your page number 42. Page number 42 has part personal and part business. Page number 43 has allocation of business and demerger, and composite income will be in one other page. Composite income is in agriculture income, I think so. 43, yeah. Where is my 43? Correct, yeah. 43. Right? So the example which we wrote in our paper, please stick it around 43 or 44 page. Stick it around 43 or 44 page. That'll be helpful for you tomorrow. So that you don't have to read the example from a different book. You can put it here itself. All right. All right. Yes. Can we do some sums? Yes. Let's do some sums. Look at the question. It says XYZ Private Limited is a proprietor who's engaged in manufacturing business and is furnishing you the following information. Okay, who is the person? It's an XYZ Private Limited and is engaged in additional depreciation. Be careful about additional depreciation. Exam will not give it to you. You have to be careful. Okay. It is the working capital of the plant machinery is given as 30 lakhs. You are opening capital. New plant and machinery which is purchased and put to use for on 8th June 2023. A, more than 180, less than 180. More than 180, 100%, 50%. You will get 100% of 15%, so therefore 15%. Yes, yes. Then they're saying new plant and machinery is acquired and put to use on 15th December 2023, 8 lakhs. 15th December, 50%, 100% up. 50%. Therefore, this will become 7.5%. Then they're coming and saying computer is acquired and installed in the office premises on 2nd January. On 2nd January. What is a normal rate? What is the normal rate? 40. You have installed on 2nd January, which means you will only get 20. You will only get 20. Yes or no? Yes. Look at the question. It says you are required to compute the depreciation and the additional depreciation as per Income Tax Act for the assessment of 24-25, assuming that all the assets were purchased by account paycheck and the company is not opting for 115BAA and BAB. 115BAA and BAB. Yes. Now the question is coming and saying you have to find out the depreciation assuming all payments are happened by account paycheck. A, payments happening by account paycheck is a good idea, not a good idea. Account paycheck is permissible, not permissible. It is permissible, therefore no restriction. Therefore no restriction. Now understand, in the question they are coming and saying computer is installed in office premises. So computer, can you claim additional depreciation? No. So therefore computer will become 0. For the plant and machinery, have they told anything? Have they told anything? No. Which means the assumption is you are eligible for additional depreciation. For the first one, you were eligible for full 20% because it is put to use for more than 180 days. For the next one, you are eligible only for 10% because you are putting to use for less than 180 days. Yes or no? Yes. Now do you have the numbers? Can you do it? Opening WDV will be depreciated at the rate of 15%. Additional depreciation is 0. Yes. So 30 lakhs into 15% will give you 4,50,000. Yes, no. 4,50,000. 20 lakhs into 35% will give you 7 lakhs. 8 lakh into 17.5%. Get me the number. 8 lakh into 17.5%. 1,40,000. Now understand, this is one block called as plant and machinery at 15%. Yes, the last item on the bottom is a separate block which is called as plant and machinery at 40%. So therefore I'll put a separate block for this. 3 lakh into 20% will give me 60,000. Will give me 60,000. So the depreciation which I can claim for first block is 11 lakh 50, 11 lakh 90, 12 lakh 90,000. And for second block I can claim is 60,000. Total depreciation is 13 lakh 50,000. See if you understood. Yeah, any doubts? All clear? All clear? Put the numbers quickly. Okay, this is just a warm-up question. We don't get these kind of questions in exams, so don't worry about it. Let's just fill the numbers quickly. Let me know so that we can go forward. Done to go? Perfect. Look at question number 2. It says, a newly qualified chartered accountant, Mr. Dhaval, is commenced the practice and has acquired the following assets in his office. Now, the moment you see in his office, you know that you are not eligible for additional depreciation. Keep that in mind. During the financial year 23-24, at the cost shown against each items, you are required to calculate the amount of depreciation that can be claimed from his professional income for the assessment year 24-25, assuming that all the assets were purchased by account paycheck. Simple, straightforward. Yes, I'm going to look at the asset. You're going to tell me the depreciation rate. There is no additional depreciation, so only one number. Yes, it says computers, including computer software. You purchase the asset on 27th September, but you put to use on 1st October. Amount is 35,000. Depreciation rate is 40%. Why, Rahul, 40%? Because it is put to use for more than 180 days. Next, computer UPS. You bought it on 2nd October, but you put to use on 8th October. 8,500 is the amount. You will get 20. Why 20? Very good. While you acquired the asset on 2nd October, you put it to use only on 8th October, and therefore you have not satisfied the 180 days condition. At the same time, computer UPS is a part of computer, and therefore you get 40%. So 40 into 50% will give you 20%. Next, computer printers, 1st October, 12,500. 40%. Very good. Next, books, of which annual publication are of 12,000. So you have 13,000 worth of books. In the 13,000 worth of books, 12,000 is annual publication, 1,000 is normal books. You bought it on 1st April, you put to use on 1st April. Depreciation rate is full 40. Rahul, annual publications we did not discuss. I told you annual publications is also 40, normal is also 40. At the end of the day, books are 40. It doesn't matter. Next, office furniture acquired from practicing CA. You bought it on 1st April, you put to use on 1st April, the amount is 3 lakhs. Rate of depreciation is, furniture is 10%. Then you bought a laptop, you bought it on 26th September, but you put to use on 8th October. Amount is 43,000. Depreciation rate is 20%. Why, Rahul, 20%? Because you have put to use for less than 180 days. Pull out the numbers. First one is 14,000. Second one is 815 to 2 will give you 1,700. 5,000. 5,200. 30,000. 8,600. Yes. Tell me which one of them are part of a single block and which ones are different blocks. Which ones should I club together in a single block? 14,000 is a part of computers. 14,000 is computers. 1,700 is also computers. 5,000 is also computers. So 14,000, 1,700, 5,000, then 5,200, then 8,600. All these are together a single block. Which means 30,000 alone will be a separate block. Same 40%, no, so it's okay. Same 40%, so it's okay. Both are plant and machinery, both are 40%. You can club together. Yes. Next. A homework question. Do it yourself. Yes. Next. Sai Limited has a block of asset carrying 15% of depreciation, whose return on value is on 31st December 2023. After reducing depreciation is 40 lakhs. Basically, this 40 lakhs is your opening WDV. He has purchased another asset which is second-hand machinery, of the same block on 1st November 2023 for 14,40,000 and has put to use the asset on the same day. Sai Limited was amalgamated with Shirdi Limited with effect from 1st January 2024. So I had an opening block of 40 lakhs. I had a new purchase of asset of 14,40,000. I have amalgamated with another company called Shirdi Limited from 1st January. You are required to compute the depreciation which is allowable to Sai Limited and to Shirdi Limited for the year ended 31st March 2024, assuming that the assets were transferred to Shirdi Limited at 60 lakhs. Assuming that it was transferred at 60 lakhs. Also assume that the plant and machinery was purchased by account pay check. Account pay check. First of all, account pay check is okay, not okay? It's okay, no problem. Yes. Now, you have three numbers in the question. You have three numbers in the question. Number one is 40. Item number 1 is 40. Item number 2 is 14,40,000. And item number 3, somewhere you see 60. Somewhere you see 60. They are coming and saying that, boss, I have transferred all my assets to Sai Limited for 60 lakhs. For 60 lakhs. Should I consider 60 lakhs, Rahul? No. I cannot consider 60 lakhs because when you read capital gains along with me, I will come and tell you under capital gains, whenever there is an amalgamation happening, the cost of acquisition for the new owner will be the cost to the previous owner. The cost of the acquisition for the new owner will be cost to the previous owner. So it doesn't matter at what price you give. The moment you are satisfying amalgamation conditions, you will take the cost as the previous owner. 60 lakhs is not relevant. 60 lakhs is not relevant. Yes or no? Yes or no? Yes, this is. It will be, no, that's what I told. No, it will be a purchase cost, but because you're satisfying amalgamation conditions, this is a pooling of interest method. In pooling of interest method, you will take the cost to the previous owner. You don't care about the purchase price. Okay. So fair market values are not important to you. You only take the previous owner. Yes. Can we do the question? Let's do the question. We are doing question number. So we are in Pgbp. We are doing question number 3. We are doing question number 3. Yes. Yes. Now in question number 3, they are coming and saying I have two assets. One asset is opening WDV. One asset is my purchase. My asset is purchase. Now opening WDV has a different holding period. My asset purchase has a different holding period. So I have to keep two columns. So I am putting particulars. Then the first person is then there is opening WDV and then there is purchase. There is opening WDV and then there is a purchase. Yes or no? Yes. I told you, whenever you have an amalgamation question, first of all find out depreciation for the whole year. So I am putting particulars like depreciation. Yes or no? Yes. Now depreciation, I have two depreciations. One is opening WDV, one is addition. That additions is less than 180 or more than 180? It is purchased on 1st November, therefore it is less than 180. Yes or no? Yes. How much is my opening WDV, Rahul? My opening WDV is given as 40 lakhs. My additions less than 180 is given as 14,40,000. Now 40 lakhs will be depreciated at what rate? Question says it is 15%. And less than 180 says it is 15% into 50%. Rahul, why am I not charging additional depreciation? Because question comes and says it is second hand machinery. So I don't have to charge additional depreciation. Get me the numbers. 40 lakhs into 15% will give you 6 lakhs. 14 lakh 40 into 15% into 50%, we'll get 1,08,000. We did this question in example right now, just now. 1,08,000. Yes or no? Yes. Now these are your depreciations. Can this depreciation be claimed fully by Sai Limited? Can it be claimed fully by Sai Limited? No. Can it be claimed fully by Shirdi Limited? No. You have to proportion. So what I'm going to do is I'm going to start proportionating. going to start depreciation proportion. I'm going to start depreciation proportion. Now understand what is going to happen is I have Sai Limited using one asset for the whole year and Sai Limited using one asset only from November. Only from November, so I have to find out each asset to different rate, each asset to different period. Yes, if I am going to have the asset for the whole year, if I am going to have the asset for the whole year, then what is happening? Sai Limited for the first asset used it for April, then May, then June, then July, then August, then September, then October, then November, December, January. Did he use it for January? Did he use it for January? No. He only used it for till December. Till December. Yes or no? Yes. So what I am telling is Sai has used it for this period and Shirdi has used it for, he's used it for January, February and March. So which means 31 plus 29 plus 31. In simple words, what I can do is I can do 366 minus the Sai, Shirdi. 366 minus Shirdi. What is 31 plus 29 plus 31? How much? 91. So Sai has used the opening WDV for 366 minus 91 number 275. Shirdi has used it for 91. The additions, Sai has used it for 61 days. Why 61 days? November and December, 61 days. Shirdi has used it for 91. Yes or no? What am I going to do, Rahul? I'm going to take the depreciation for opening. Opening depreciation is 6 lakhs by 366. I put to use the asset for 275 days in my company and the total days are 366, so I am dividing by total. 91 will also go into 6 lakhs by 366. Come to the additions part. Totally the asset was used only for 152 days. Depreciation I am trying to proportion is 1,08,000. So I am going to proportion 61 by 152 into 1,08,000 and 91 by 152 into 1,08,000 to 1,08,000. So Sai will get 4,50,820. Shirdi will get 43,430. Shirdi will get 1,49,180. For the additions part, Sai will get 43,342 and Shirdi will get 64,650. Yes, which means the total deduction which I can claim is 4,50,820 plus 43,342 and total deduction which Shirdi can claim is 1,49,180 plus 64,650 8. You should get the numbers as 4,94,162 and 2,13,838. 838. Rahul, how to check if my number is right? How to check if my number is right? The total of this number should tally my total of depreciation. Total of the bottom should tally my total of depreciation. Check. Check. You should get 7,08,000. Why are we getting the same number out? Like I told you, the logic is the whole depreciation for the year is being split between both the parties. The whole depreciation for the year is being split between both the parties. So no matter how hard you try, 7,08,000 is what will get split between Sai and Shirdi based on the proportion number. Based on the proportion number. Did you understand? Yes, ma'am. Correct. Yep. Based on that? Yeah. Like I told you, Tanya, what I'm going to do is I am going to complete the whole chapter for you. And when I complete the chapter, after that I'll come back in the first of the chapter and I'll come and tell you which of those items are there for 115 BAA and BAB and which of them are not there. Okay, so I don't want to push it to you right now itself because that will be too complicated. So what we'll do is we'll complete the whole chapter and then when we revise the chapter, that time I'll come and tell you which deductions you can ignore off. Okay, so that we'll do a second revision that time. It's better that way. Don't worry, I'll take care of that. Done? Can we go first? Yes. Let's look at the next question. Says Lights and Powers Limited engaged in the business of generation of power. The moment you see generation of power, you should know it is two things. Either you can opt for SLM method or WDB method. Second thing, either you will get additional depreciation. You will get additional depreciation. Keep it in mind. Yes. So Lights and Powers Limited is engaged in the generation of power. Furnish you the following particulars relating to previous year 23-24. To previous year 2024. They compute the depreciation allowable under Section 2 for year 24-25 and the written down value of the block as on last year. As on the last day, while computing the income under the head Pgbp, the company has opted for the provisions of doing depreciation as per written down value. As per written down value. You understand when I do this, you have to do additional value. You are eligible for and the company opted for acceleration. Will I have to give additional? The company is opting for value. I have to also give additional. You are required to assume that all the assets were purchased by way of account basis and company has not opted for a provisions of 115 BW or DA. 115 BW or DA. Yes or no? Yes. Let's look at the question. It says there are some assets. Okay. Look at the assets and tell me what is the depreciation rate. Look at the assets and tell me what is the depreciation rate. First one, they're coming and saying written down value of the plant and machinery is 15% block as on 1st April 2023. As on 1st April 2023, the original purchase value was 8 lakhs. Now the value is 5,78,000. You will depreciate. You will depreciate 5,78,000 or 8 lakh. Yeah, ma. You bought it 10 years back for 8 lakhs. Today the value is showing 5,78,000. You will depreciate how much? 5,78,000. Yes or no? So 5,78,000. What is the rate of percentage? 15%. The rate of percentage is 15%. So therefore number will be number will be 86,700. 86,700. Next, purchase of second hand machinery 15% block on 29th December 2023 for business purpose 2 lakhs. For business purpose 2 lakhs. When did you purchase? 29th December. Rate of depreciation is 7.5% plus. Can you claim additional depreciation? Well, no. Why? Second hand machinery. So 2 lakhs into 7.5% number is 15,000. Yes. Machinery number 3. You have purchased machinery Y 15% block installed and purchased on 12th September 2023 for the purpose of power generation. For the purpose of power generation. Normal machinery 15% is the rate. You have used it on 12th July, which means more than 180 days. Therefore, it is 15% plus. Can you claim additional depreciation, Rahul? Can you claim additional depreciation? Yes. What is the rate of additional depreciation? 20. So 8 lakhs into 35% number. 8 lakhs into 35%. 2,80,000. Then acquired and installed for use a new pollution control equipment on 31st July 2023. Hey, think about it. Like I told you yesterday, I will not give you all the assets. Use your head. Use your head. I say it is pollution control equipment. Pollution control equipment. You are trying to help the society, not help the society. Help the society, which means government will like to give you more depreciation, less depreciation. More depreciation means number is 40%. Number is 40%. Now, Rahul, 40% number, will you get additional depreciation? Not get additional depreciation. Will you get additional? Not get additional. You will get additional because it is a plant and machinery. It is a plant and machinery. Therefore, rate is 60%. Rate is 60%. Number was 2,50,000 into 60% number. 1,20,000. 1,50,000. 1,50,000. Clear? Clear? Can we go forward? Yes. Next. New air conditioner which is purchased and installed in office premises 8th September 2023. Hey, first of all, what block is this? New AC. Which block? Building a furniture, a plant and machinery.
Plant.
It is plant and machinery. So therefore, rate is 15%. Can you claim additional depreciation, Rahul? No, because office premises. So 3 lakh into 15% will give you 45,000. Next, new machinery Z 15% block acquired and installed on 23rd November 2023 for the generation of power. For the generation of power. Rate is 15%. Additional depreciation eligible, not eligible? Eligible. Therefore, 20%. Rahul, is the numbers right? No, the numbers are not right because you have installed it on 23rd November. So the whole thing will be into 50%. Therefore, it is 35 into 50%, 17.5%. 17.5% into 3,25,000. 56,875. 56,875. Clear? Clear? Next. Sale value of an old machinery X sold during the year. Sale value of an old machinery X which is sold during the year. You had purchased it for 4,80,000. You have a WDV on 1st April 2023 for 3,46,800. You have sold it for 3,10,000. You have sold it for 3,10,000. Rahul, which of the numbers should I take? Which of the numbers should I take, ma? Should I take my purchase price? Should I take my WDV as per books, or should I take my actual sale value? I will reduce my actual sale value. I will reduce my actual sale value. Format says opening WDV plus additions minus sale value. So this will be reduced. Now I told you sale value should be done from FIFO basis. Should be done from FIFO basis. So the 5,78,000 which you have on top, the 5,78,000 which you have on top is now no more 5,78,000. Is now no more 5,78,000. It is 5,78,000 minus 3,10,000. It is 5,78,000 minus 3,10,000. So therefore, you need to do What is 5,78,000 minus 3,10,000? 2,68,000. Correct? 2,68,000 into 15% will give you 2,68,000 into 15% will give you how much? 40,200. 40,200. Yes, I have ended up changing my opening WDV. I have ended up changing my opening WDV, so my depreciation also comes down. My depreciation also comes down. Rahul, which of those are blocks? I see a 15% block going on, right? What and all are the blocks? 40,200 plus 15,000 plus 2,80,000 plus 45,000 plus 56,875, which means in simple words, this 1,50,000 will be separate. The 1,50,000 will be separate. Balance are equally together. Balance are equally together. Yes or no? Yes. You understood what the question is? Okay, great. Homework for you. Homework for you. Prepare it yourself. Next, you are required to compute the quantum of depreciation which is available under section 32 in respect of the following items of plant and machinery. Following items of plant and machinery. Following items of plant and machinery which is purchased by PQR Textile Limited by paying account pay check, which is engaged in the manufacture of textile fabrics. Manufacture of textile fabrics. The moment you see manufacture, you are eligible for additional depreciation. Assume that the company does not opt for the provisions of 115BAA and BAB. They are not opting for the provisions. They are saying new machinery is installed on 1st May 2023, 84 crores. 84 crores. Tell me the depreciation rate. Tell me the depreciation rate. Normal depreciation will be 15 plus additional will be 20. Yes or no? Yes. Next, new windmill is purchased and installed on 18th June 2023. Normal depreciation rate is how much? Normal windmill goes into renewable energy source, therefore it is 40. Windmill goes into renewable energy source, so therefore it goes 40 plus 20. Why 20, Rahul? Because it is generating power. It is generating power, so therefore it is installed in generation unit. Next, lorries for transporting goods to sale depot. Lorries for transporting goods to sale depot. The purchase and put to use happen on July 2023. July 2023. This is a motor vehicle. This is a motor vehicle. Yes. Yes. Rate is 15 or 30. Will you use 15 or will you use 30? Will you use 15 or will you use 30? You will use 15. Why, Rahul, am I using 15? Because understand, this is not a lorry you gave on hire. You should be in the business of giving it on hire, then it becomes 30. Then it becomes 30. You are having lorries which is helping you transport, You are not giving it for hire, therefore it is 15. Therefore it is 15. Can you claim additional depreciation, Rahul? Can you claim additional depreciation? No, because it is motor vehicles. Because it is motor vehicles. Next, there are some items which you have purchased after 30th November. You have items purchased after 30th November, which means these items will be less than 180. These items will be less than 180. First item is given as forklift. First item is given as a forklift. Forklift now motor vehicles. Depreciation rate is 15%. Will you get additional depreciation, Rahul? Yes. How much? 20%. But asset was purchased after 30th November, so the whole thing will be into 50%. Yes or no? The whole thing will be into 50%. Next, computers installed in office premises. Depreciation rate is 40. Can you claim full 40, Rahul? No, because after 180 days. Hey, can you claim additional depreciation? Can you claim additional depreciation? No. Why, Rahul? Installed in office premises. Next, computers installed in factory, 2 lakhs, 2 crores. Rate is 40 plus 20. The whole thing into 50. Very good. Last one, new imported machinery. New imported machinery. Let's read the next part. It says the new imported machinery arrived in Chennai on 30th March 2024 and was installed on 3rd April 2024. All other items were installed during the year ended 31st March 2024. 31st March 2024. The company was newly started during the year. Company was newly started during the year. You are required to compute the WDV. Now look at the question. It says the machinery which you imported. You imported the machinery on 30th March, but you installed it on 3rd April. If you installed it on 3rd April, did you get depreciation? Not get depreciation. You will not get depreciation because it is not put to use. It is not put to use. Yes or no? Yes or no? Yes. Question is saying find out the depreciation and find out the WDV of the block after charging depreciation. After charging depreciation. Put out the numbers. Put out the numbers. 84 lakh into 35%. 29 crores. 84 crores into 35% mark. 29.4. 22 into 60%. 132. 13.2. 3 into 15%. 0.45. 4 into 17.5%. 2 into 30%. 0.12 into 0 is yes, sir. Tell me which ones are blocked. 29.4 is the one block. 13.2 is the second block. 0.45 is a part of first block. 0.7 is a part of first block. 0.2 is a part of second block. 0.3 is a part of and last one is a part of block. The block 29.85 plus 0.7 is 30.55. Block number 1 is giving you 30.55. Block number 2 is giving you 13.2 and 14. These are the depreciations per block. These are depreciations per block. Look at your cost. Look at your cost. Cost is 84 plus 3 plus 4 plus 12. 84 plus 3 is 87. 71, 73, 83. So we will reduce 83 from 30.55. You will reduce 83 from 30.55. For the second block it is 22. For the second block it is 22 plus 1 plus 2. So therefore 24, 25. So you will reduce 25 minus 14. Therefore second block will become 11. First block will become 42.45. Correct? So block number 1 closing WDV is 42.45 and block number 2 closing WDV is 11. Yes, these kind of questions don't come so much for exam, so don't focus so hard. Depreciation rates, how to find out rates is what I'm trying to understand with you. Yes or no? Yes, so don't focus so hard on this. Can we go forward? Can we go forward? Pratanya, any doubts? Can we clear? Perfect. 72.45 was no. Oh, sorry, ma. 30 illa 72. 42 illa 72. Did I miss something? One not 3 எப்படி இருக்கு? 84 plus 3 plus 4 plus 12 correct தான பண்ணேன்? 84 plus 3 is 87, 71, 73, 83 தான். Oh, sorry. 84 plus 3 is 87, 91, 93, 103. Okay, correct. Bad maths. It is 103. One not 3 minus 30.55. Yeah. Can we go forward? Yes. Okay. Let's complete this depreciation part. With the last concept called as unabsorbed depreciation. With what? Unabsorbed depreciation. Rahul, what is unabsorbed depreciation? Income tax comes and says that, boss, understand, what I was trying to give you is a depreciation, which is basically a write-off of your cost which you incurred in the past. But there can be a possibility that the company may in the current year be making losses. If the company in the current year is making losses, do you think that the cost which you are trying to amortize, can be borne by the company, not borne by the company? It cannot be borne by the company. So therefore, what happens is section 32 comes and says, if the Pgbp ends up in a loss, then in that case, to the extent the loss pertains to depreciation, that will be called as UD. UD meaning unabsorbed depreciation, and the balance will be called as business loss. How do you work this out, Rahul? Let's take some examples. Okay, I am in case number 1. My Pgbp is showing a 2 lakhs worth of loss. When I looked at my depreciation schedule, I had a depreciation claim in the current year of 50,000. If you think about it, if my Pgbp is showing 2 lakhs after claiming depreciation of 50,000, it means my business loss was 1,50,000. Yes or no? My business loss was 1,50,000, 50,000 is depreciation, therefore my Pgbp loss is 2 lakhs. In that case, they are coming and saying, first your UD will be called as 50,000 and the balance business loss will be called as 1,50,000. Yes or no? Simple logic. Yes. Scenario number 2. My Pgbp loss is 2 lakhs. My depreciation is 3 lakhs. Now, if my depreciation is 3 lakhs and my Pgbp loss is 2 lakhs, it means technically my business would have done a profit of 1 lakh. In that I claimed a depreciation of 3 lakhs, resulting in a loss of 2 lakhs. Yes or no? Yes. In which case I am coming and saying, Rahul, out of that business profit of 1 lakh, I had depreciation of 1 lakh, I absorbed it off, leaving me with 2 lakhs of depreciation which I could not absorb. So my unabsorbed depreciation will become 2 lakhs. My business loss will become 0. Yes or no? Yes or no? Rahul, case number 3. My PGBP is 2 lakhs. Current year I claimed no depreciation. Current year I claimed no depreciation. If I claim no depreciation, this 2 lakhs was fully because of business loss. So therefore UD will become 0. Business loss will become 2 lakhs. Yes or no? Yes or no? Yes. Rahul, case number 4. Case number 4. My PGBP income is showing 20,000 profit. My UD was 30,000. My UD was 30,000. How did my PGBP become 20,000, Rahul? I would have had a business income of 50,000, in which I would have claimed a depreciation of 30,000, leaving me with a profit of 20,000. Have I exhausted my whole UD, Rahul? Yes, I had a depreciation, I utilized my whole depreciation. Is there any unabsorbed case? No. So therefore unabsorbed will be 0. Business will also be 0. Business will also be 0. Yes or no? Yes or no? Scenario number 5. You help me with this scenario. I'm saying that my PGBP loss is 50 lakhs. My PGBP loss is 50 lakhs. My depreciation is 1 lakh, let's say 1 crore. My depreciation is 1 crore. My UD is my UD is 50 lakhs. How, Rahul? Hey, how did you get a business loss of 50 lakhs? When you claimed a depreciation of 1 crore, it means your income would have been 50 lakhs. Yes or no? Your PGBP, your business income would have been 50 lakhs. You tried to claim 1 crore of depreciation, arriving at a loss of 50 lakhs. So therefore, I'm coming and saying, boss, out of the 1 crore of depreciation, 50 lakhs I used against my business profit. Which 50 lakhs is what I was not able to absorb, and therefore that is called as unabsorbed depreciation, leaving me with a business loss of 0. Leaving me with a business loss of 0. Rahul, how to simply understand this? How to simply understand this? Whenever you see a PGBP loss, give the first priority to depreciation. Give the first priority to depreciation. Hey, here I have 20 lakhs. First scenario, I have 20 lakhs. First priority will go to depreciation. So depreciation became 50,000. Balance became business. Balance became business. Yes or no? Yes. Scenario number 2, Rahul. My PGBP was 2 lakhs. I'll give first priority to depreciation. So which means out of 3 lakhs, first priority went to PGBP. So PGBP became 2 lakhs. When 2 lakhs fully got into UD, nothing is left for business. Nothing is left for business. Yes or no? Yes. Scenario number 3, Rahul. My PGBP was 2 lakhs. Depreciation is 0. My first priority will go to depreciation. Depreciation is 0, leaving me with business of 2 lakhs. Leaving me with business of 2 lakhs. Yes or no? Fourth scenario, I have a profit of 20,000. Hey, the moment I have a profit, do I have any loss? No. If I don't have any loss, will I have any UD? No. Will I have any BL? No. So therefore nothing is there. Therefore nothing is there. Help me with the last one. Look at the last one. Last one left. My business loss is 50 lakhs. My total PGBP loss is 50 lakhs. First priority will be given to depreciation. Depreciation is 1 crore. You can take whichever is less. Whichever is less is 50 lakhs. So I gave full 50 lakhs to UD. Out of 50 lakhs, I gave full 50 lakhs to UD, which means business left is 0. Business left is 0. Clear? Yes. Do one more example. See if you understand. My total PGBP is 50 lakhs. I claimed a UD of 30 lakhs. First priority will be given to depreciation. Depreciation is 30. So therefore, I will allocate 30 to UD. I still have a loss of 20. That 20 will go to business loss. The 20 will go to business loss. Yes or no? Yes or no? In simple words, I am coming and saying that, Rahul, whenever you have a PGBP loss, first priority give to UD, balance go to business. Balance go to business. Now, Rahul, why is what the benefit? Why and why? What are we doing? Income tax comes and says that if you have any UD, unabsorbed depreciation, you can carry forward the unabsorbed depreciation for infinite years. You can carry forward the definition, unabsorbed depreciation for infinite years. In every year of carry forward, you can set off against any head other than salaries. Against any head other than salaries. So if I have to give you a breakup, when it comes to unabsorbed depreciation, unabsorbed depreciation can carry forward for infinite years. Can carry forward for infinite years. Business loss can be carried forward only for a period of 8 assessment years. 8 assessment years. UD comes and says, in the year of set off, you can set off against any head other than salaries. Any head other than salaries. Yes, under business laws they come and say, if you want to set off in year 1, you can set off against any head other than salaries. You can set off against any head other than salaries. In all subsequent years, you can set off only against business income. You can set off only against business income. Case number 3, return filing on time is not mandatory. Return filing on time is not mandatory. Yes, these are the 3 reasons why someone would prefer UD over BF. UD gives you an infinite carry forward, whereas business laws gives you a 8 assessment years carry forward. If you want to set off, UD allows you to set off against any head other than salaries in any year. But when it comes to business comes and says you can set off against any head other than salaries only in year 1. Every other year you can set off only against business income. Third, they are coming and saying, even if you want to file your return late, UD will still be eligible, whereas BL will not be eligible. These are the reasons why someone would prefer UD and not BL. These are the reasons why someone would prefer UD and not BL. Yes or no? Yes or no? This is the rule. You have to follow the rule also. Yes or no? Makes clear? Yes, can we go forward? Concluding this depreciation topic with something called as balancing charge. What charge? Balancing charge. Rahul, what is balancing charge? Understand, no? When we did WDV method, I told if you are planning to sell an asset, you will reduce the wholesale value from the block. But I did not tell you what happens when we do SLM method. Now understand, no? If you are doing WDV method, I have no problem. Because you are maintaining all the assets together. And one sale value is affecting your other assets. But when it was SLM method, I told you each asset you have to maintain individually. So what happened is, I had an asset worth 100. WDV of the asset today is showing 60. I sold this asset for 50. Now in accounts you would have come and told, Rahul, 60 is the WDV, 50 is the sale value, therefore loss is 10. In accounts you would have told loss is 10. Yes or no? This loss of 10, what will you do? In accounts you would have charged it off to P&L. Yes or no? You charge it off to P&L, but ask yourself a simple question. This 10 is a capital loss or a revenue loss? It's a capital loss. So can income tax allow you to charge it to P&L? No. So income tax is coming and saying, understand people, my cost is 100, my WDV is 60, my sale becomes 50, arriving at a loss of 10. Ideally speaking, there is no loss. The reason why there is no loss is income tax comes and says, please understand assessees, I told you that you should charge depreciation at 10% because I thought that is the best practice in the market. I thought that is the best practice in the market, but apparently your asset is being sold for 50. Your asset is being sold for 50. So I should have given you more depreciation. Had I given you more depreciation, your WDV would have been same as sale value. Same as sale value, which means when I gave you the depreciation rate, I did not estimate it properly. Who is saying this? Who is saying this? Income tax is saying this. Income tax is saying this. They are saying when I gave you the depreciation, I by mistakenly gave you lower depreciation. Had I given you higher depreciation, your WDV would have been 50, and so you would have had zero profit, zero loss, which means in the past years you have claimed lower depreciation to the extent of 10. No worries, no worries. Claim the 10 today. Claim the 10 today. In simple words, income tax comes and says this 10 will be allowed same as accounts, will be allowed same as account, but it will be called as terminal depreciation. What will it be called as? It will be called as terminal depreciation. Terminal depreciation is me charging a depreciation at the life end of the asset. At the life end of the asset. Think about it. I am saying that I have charged 60 in my books. I have charged depreciation of 40 in my books, arriving at a WDV of 60. I should have charged 50 in my books to arrive at a sale value of 50, in which case you would have had no profit, no loss. You would have had no profit, no loss. So by mistakenly you have charged lower depreciation, claim the balance today. Claim the balance today. This is called as terminal depreciation. This is called as terminal depreciation. Yes or no? Yes or no? I am changing the example. I am changing the example. My WDV, my cost is showing 100. What is my cost showing? 100. My WDV is today showing 60. My WDV is today showing 60. I sold this asset for 70. I sold this asset today for 70. My profit is 10. Yes or no? My profit is 10. In accounts, what you would have done? You would have written it as profit on sale of assets in your P&L. Profit on sale of assets in your P&L. A capital profit or revenue profit? Capital profit. Will income tax ask you to tax capital profits? Will income tax ask you to tax capital profits? No. I told you capital receipts are generally not taxable. Generally not taxable. No. Our income tax is saying, boss, in the earlier example, I forgot to give you higher depreciation, so I am giving it right now. In this example, income tax will come and say, I by mistakenly gave you more depreciation. I should have given you only depreciation of 30. I gave you depreciation of 40. So last year's and all, you claimed a depreciation of 40, making a WDV as 60. Whereas I think I should have given you depreciation only of 30. If I would have given you 30, WDV would have been 70. Sale would have also been 70. Profit would have been 0. I by mistakenly gave you extra depreciation. By mistakenly gave you extra depreciation. Let me do one thing. Let me ask you to reverse the depreciation. Let me ask you to reverse the depreciation. So income tax will say, I gave you depreciation of 40. I should have given you depreciation of 30. So I gave you extra depreciation of 10. I gave you extra depreciation of 10. Reverse this depreciation to your P&L. In simple words, offer to tax. Offer to tax. This is called as balancing charge. What is it called as? Balancing charge. I am coming and saying you should have charged depreciation only of 30. You charged depreciation of 40. No worries. Leave those years. The extra depreciation which you charged, you put it to P&L today. You put it to P&L today. Reverse your depreciation of. Reverse your depreciation of. That is called as balancing charge. Hey, indirectly we are doing accounts only. Indirectly we are doing accounts only. In accounts we told 10 rupees loss should be charged off. We are saying 10 rupees should be allowed as terminal depreciation. Here we are saying 10 rupees should be offered to tax. Here also we are saying offered to tax, just that we are not using the word capital profit, we are using the word balancing charge. We are using the word balancing charge. Yes or no? Yes or no? Yes. Scenario number 3. Scenario number 3. I am coming and saying that, Rahul, my cost is 100. My cost is 100. My WDV is 60. My WDV is 60. My sale value is 120. In accounts will say profit is 60. Yes or no? For the sake of change numbers, let's make it 130. Accounts will say profit is 70. This profit will go to my P&L in accounts, correct or not? Yes, because it is a profit on sale of asset. For income tax, is this a revenue profit or a capital profit? It is a capital profit. Now, income tax is saying that the cost was 100. I gave you depreciation of 40. You made a WDV of 60, but you are planning to sell the asset for 130. You're planning to sell the asset for 130. Hey, if you're planning to sell an asset for 130, when the cost itself was 100, how did you sell for 130? How did you sell for 130? I will come and say, sir, actually what happened? No, this asset I never used itself. This asset was never used itself. I bought this asset as an investment. I bought this asset as an investment. When you buy an asset for investment, idea is to get profits, not get profits. Idea is to get profits. When you buy shares for depreciation, or you buy shares for giving profits on that shares, for earning profits on the shares. So I went and told the income tax department that, sir, actually I did not want to use the asset. I did not want to use the asset. I actually bought the asset as an investment. As what? Income tax will say, if that is the case, I gave you unnecessary depreciation. I gave you unnecessary depreciation. Reverse the full depreciation of. Reverse the full depreciation of. How much reverse? How much did I claim? I claimed 40. How much should I reverse? Reverse 40. So I am saying in this 70, I will reverse 40 as balancing charge. Yes or no? Yes or no? I am saying in my P&L I claimed 40. First of all, reverse that 40. First of all, reverse that 40. But then I am saying, Rahul, at the same time, it was an investment. It was an investment. The moment you do investment, is it under Pgbp or is it under capital gains? It is under capital gains. So I am saying capital gains, my full value of consideration is 30. My cost was 100. Why 100, Rahul? Because I reversed the whole 40. I reversed the whole 40, so it came back to 100. It came back to 100. Therefore, the 30 will become my capital gains. The 30 will become my capital gains. So this 70 will end the balance. 30 will become CG. The balance 30 will become CG. In simple words, Rahul, in simple words, if you have a loss, the loss will be called as terminal depreciation and will be allowed in the income tax computation. If you have a profit, to the extent the profit pertains to your depreciation claim, reverse the profit as balancing charge. If you have a profit beyond the cost itself, then it is a capital gains. Then it is a capital gains. Understand, all these will only apply in case you are following SLM method. All these will apply only in case you are following SLM method. WDV method has a different computation. Yes. So 3 words we have: balancing charge, terminal depreciation, capital gains computation. Did you understand this? Did you understand this? Yes. Let's see it from the book also. See if you understand the example in the book. Look at the example from the book. Tell me if you understand this. Okay. The question comes and says, it is in page number 39. It is in page number 39. It says the original cost of the asset was 1,000. The original cost of the asset was 1,000. The WDV of the asset as on the date is 600. As on the date is 600. You are required to show what are the tax implications if you sold the asset for 400. If you sold the asset for 400. Now tell me, you have bought the asset for 1,000. You had done a WDV of 600 and has sold it for 400. Did you incur a profit or you incurred a loss? You incurred a loss. How much did you incur loss? 200. Why did you incur the loss of 200, Rahul? Because income tax gave you lower depreciation earlier. So income tax is saying this extra depreciation you claim right now in the form of terminal depreciation. Scenario number 2. I bought the asset for 1,000. I got the asset depreciated to 600, but I sold it for 900, which means I made a profit of 300. I am saying, Rahul, I should have not made the profit of 300 because I gave you extra depreciation. So you do one thing, you reverse depreciation to the extent of 300. This 300 will be called as balancing charge. This 300 will be called as balancing charge. Last scenario, I'm saying my asset was worth 1000, my depreciation is 600 WDV, my sale value today is 1300. I will say, boss, you have sold it beyond the cost also, which means depreciation, whatever you claimed, should be reversed. How much depreciation did I claim? How much depreciation did I claim? I claimed 1000 minus 600, 400 depreciation I claimed. So I will reverse 400. This 400 will be called as balancing charge. Over and above that, over and above my cost, I earned a profit of 300. I earned a profit of 300. This 300 will go into my capital gains. This 300 will go into my capital gains. Yes or no? Yes or no? Yes. Read this. Read this. Be careful about it. Read this and be careful about it. Clear? Clear? Yes. Great. 2 days of discussion. We are done with what is called as depreciation. We are done with what is called as depreciation. Any doubts do you have on the depreciation part? Do you have any doubts on the depreciation part, or everything is clear? Everything is clear? Yes. Because in SLM method, what you're doing is you are valuing the asset individually, ma. Okay, you're maintaining assets individually, which means for every asset you know the WDV, right? But when it comes to WDV method, do you have the assets value individually? No. When you don't have the assets value individually, do you know what is the WDV of that asset on the date? If you don't know the WDV of the asset as on that, can you reduce something from the block? That is why you're reducing the wholesale value of. Okay, but in SLM method, since I'm maintaining individual assets, I have WDV of each asset individually. Make sense? Technically, there can be a profit or loss, because see, what you're doing right now is a profit and loss only. I am trying to justify saying it is not a capital profit or a capital loss. Okay, idea is very simple. When you put it into your P&L, no, what happens is normally everyone will come and say this is a capital profit or a capital loss, and therefore they will ignore it from income tax. I am saying it is not a capital profit or a capital loss, it is just a reversal of my depreciation. Okay, you would have done this in accounts, no? You have something called as change in accounting estimates. Yes, where initially you would have charged 100, then later on you felt you should have charged 120, so therefore you are putting extra 20. That is what we are doing. Okay, so I am saying that I initially charged 400 of depreciation. I should have charged extra 200, so I am charging terminal depreciation. In second scenario, I am saying I charged the 400, but I should have charged lesser, so I am reversing 300. In the last scenario, I am coming and saying I should have not even charged depreciation, so I am reversing the whole 400.
Can even if you're making any other additional profit, that is the last case, it is coming as
capital gains. Because then I am coming and saying it is not a capital, it is not a revenue profit itself. In that scenario, I don't have a justification, right? My only justification will be it should not have been a fixed asset itself. It should have directly gone to my investment schedule, right? If it goes into my investment schedule, it does not hit my Pgbp. It directly it's my capital gains. So therefore, the difference of 300 rupees, I'm directly putting in my capital gains. Make sense now? All right. There are some rules which are there in this. So let's read these rules. It is not so important from exam perspective, but it's good to know. It's good to know. So let's read this quickly. Rule number 1, it says it is mandatory to claim depreciation. It is mandatory to claim depreciation. Income tax very clearly clarifies that, boss, you are supposed to claim depreciation if the law permits you to do it. If the law permits you to do it, do not come and tell me that I will not claim depreciation and I'll defer it. I will defer it. That's not how the policy is. That's not how the policy is. If you remember, when we told closing WDV means cost minus depreciation actually allowed. Depreciation actually allowed. Income tax actually uses the word depreciation actually allowable. Depreciation actually allowable. Income tax comes and says that if at all the act is permitting you to claim a depreciation, it is your obligation to do the depreciation. It is your obligation to do the depreciation. If you don't do the depreciation also, income tax will assume that you have done the depreciation. Income tax will assume that you have done the depreciation and automatically reduce your written down value. You may come and ask me, Rahul, why is income tax being so nice to you? Why is income tax being so nice to you? Income tax can obviously come and say, no, if you don't claim depreciation, profits will be higher. No. Idea of income tax is they are coming and saying, boss, if you are in a company which is claiming deductions like a tax holiday, for example, 10AA, the SEZ wala case, or you have some 80 IA, IB, IC and all, people what they used to do is that time profits were fully exempt. That time profits were fully exempt. So what happened is people never claimed a single depreciation. People never claimed a single depreciation. They put their assets later on. And when the holiday period was over, that time they started claiming big depreciations. Because of which what happened? Earlier tax was fully exempt. Current year tax has also come down. So income tax said was mandatory depreciation for everyone, so that if you are in a tax holiday period, to the extent of the depreciation also you will not get a deduction. Don't come and ask me to defer depreciation. I will not do it for you. Even if you forget to claim depreciation also, I will assume you have claimed depreciation. And I will remove it off. Yes or no? Yes. Rule number one. Let's read rule number 2. It says, in cases of lease, license and all, depreciation will be allowed only to the lessor, who's the owner of the asset. Under Income Tax Act, there is no distinction between a finance lease or an operating lease. Even in case of a finance lease, income tax will only give you depreciation to the original owner. Until and unless the asset is actually sold to the new lessee. So under Income Tax Act, even if it is a finance lease or it is an operating lease, depreciation will only be claimed by the original lessor. Unless and until the asset is actually transferred. The date on which the asset is actually transferred, from that date lessee will claim. Until such time only lessor will claim. Which means that the lessee can claim the lease charges. In accounts, if you remember, when you did finance lease, you would have not claimed the lease charges in the P&L. You would have claimed the depreciation in the P&L. Yes, income tax is saying reverse the depreciation off and claim the lease charges off. Because under Income Tax Act, unless and until you become the actual owner, I will not give you the depreciation. Yes or no? Yes. Case number 3. I am saying depreciation shall be allowed to the lessor even though the asset is registered in the name of lessee, as long as the lessor has the right to retain the title. Is there with the lessor. Basically what happened is, there was this company called as ICDS Limited. What this ICDS Limited was doing is, ICDS Limited was in the business of letting out cars. So what happened is, the lessee came to the person and came and said, I don't want to have the car in your name. Because the moment you give me the car later on, it becomes a second sale. You finance me, you pay the money to the owner of the car, the seller of the car. I will take the car in my own name. I will slowly start repaying money back to you. And eventually I'll take the car from you. Assessing officer came and said, boss, you are not having the title of the car. You are simply financing the car. In that case, you are not eligible for depreciation. They told it to ICDS. They both went to court. Supreme Court decided that, boss, just because the name is not in yours, it doesn't mean that you don't have the title over the asset. If this person does not pay the money, will you take back the asset from him? Yes. So therefore the title is still with you. Legal ownership name is not important. In which case, even if you are not the person registered on the agreement, you can still claim depreciation. Because the title is still with you. Yes or no? Next. In case of hire purchase, the hire purchaser shall be eligible for depreciation right from the beginning of the full amount, assuming that the asset has been acquired by him that time itself and the payments to vendors are merely loan repayments. Yes, so I am saying, if you are doing a hire purchase transaction, technically it is nothing but a loan installment. The day when you started the hire purchase, that day itself you became the owner. So that day itself you can claim depreciation on full asset. Don't wait for loan payments to happen. Next, last item you can ignore it off. You will read it in capital gains. Yes or no? Yes or no? Yes, 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 yes. Okay. Ritanya, do you have 10 more minutes? Can we do one more section before we close? Okay. Yes, we have now completed what is depreciation. We have now completed what is depreciation. Quickly revising our depreciation, we came and said depreciation, you should be the owner. You should put to use the asset. You should not claim depreciation on land and goodwill. Yes, an asset should be in your name. Asset should be in your name. It is not required now because asset can be in the name of the other person also as long as you have the title. The case is ICDS. The case is ICDS. If it is a lessor, lessor can claim depreciation. Even if it is finance lease, lessor will claim depreciation. If it is hire purchase, purchaser will claim the depreciation. Depreciation is mandatory to be claimed. It cannot be optional. Cannot be optional. You have to mandatory claim depreciation. You have methods like SLM and WDV. SLM is for power sector. If you are doing SLM method, you have three things called as terminal depreciation, balancing charge, capital gains. If you are doing WDV method, it's a block of asset concept, direct block, where you do opening WDV, additions more than 180, additions less than 180, additions not put to use, reduce sale value, arrive at the cost. On that cost, you have to do depreciation. Sale value, if you have, you will do the sale value from a FIFO basis. You will do depreciation on WD, opening WDV at 100%, more than 180 at 100%, less than 180 at 50%. If you are into manufacturing sector, you can also claim additional depreciation at the rate of 20%. But if you are using it for less than 180 days, it is 10% in year 1, 10% in year 2. If you have an asset which is used both for personal and business purpose, personal purpose depreciation will be disallowed, and cannot be reduced from the block also. But if you have a composite income where you are doing tea business or coffee and all, in that case you can claim the full depreciation from the block also and will be reduced from the Pgbp also. Yes or no? This is what we learned in depreciation chapter, along with some additions rules and everything. How to value rules, what is addition rules and everything. Those are simple things. Please read it from your end. Can we go forward? Yes. Going to the next one. The next one is called as deductions of amount deposited in tea, coffee or rubber development account. Income tax comes and says that if because of an act, a tea act, a rubber act or a coffee act, if because of the act you have deposited a special reserve in your books, you have created a special reserve called as tea development account, coffee development account or rubber development account, where this reserve which you have, you are going to use it for the purpose of development of your operations. If you have created an asset which you are going to use for development of your operations, whatever money you deposit in this account can be claimed as a deduction. Hey, this is only for those people who are engaged in tea, coffee and rubber, which means you should be in the business of tea, coffee and rubber. In your business, you have allocated some money to a reserve. Whatever money you put in that reserve will be allowed as a deduction, subject to the condition that you can deposit the money within 6 months from the end of the previous year or within the due date of filing the return of income, whichever is earlier. Now tell me, Rahul, which one will be earlier normally? Your year ends on 31st March. So you have April, May, June, July, August, September. When did you file your return, Rahul? You normally file your return on October or November. Correct or not? So for you, from exam perspective, technically the only thing which can apply is 6 months from the end of the previous year. Which means this provision of due date from return filing will not be applicable. In simple words, Rahul, if you are in the business of tea, coffee, rubber, if you create a special account called as tea, coffee or rubber development account and you put in that account within 6 months from the end of the previous year a certain money, I will give you the deduction of that rupees. I will give you a deduction of that money up to a maximum of 40% of the Pgbp. How much? Up to a maximum of 40% of the PGBP, which means Rahul, I have an PGBP of 100. What do I have? I have a PGBP of 100. Okay, this year I decided to deposit 50 rupees in the T development account. I decided to deposit 50 rupees in T development account. I will get a deduction of only 40. I will get a deduction of only 40. Yes, so which means I have to offer to tax 60. I have to offer to tax 60. This is what the rule says. This is what the rule says. The rule says that if you are going to deposit money into this account, you can maximum claim 40% of the PGBP. Now understand 40% of what? PGBP. Meaning you have to complete your whole PGBP. You have to complete your whole PGBP. You will arrive at the final number. On the final number, you should deposit 40%. On the final number, you should deposit 40% of the PGBP. Now, I am using the word PGBP, which means it is before that 40-60 split. Hey, you have tea 40-60, coffee 40-60, rubber 35-65. And the split pandradhukku munadiyoda number you have to do the deposit. You have to do the deposit. In simple words, Rahul, let's say that my PGBP is 100. What is my PGBP? 100. I can maximum deposit 40. Let's say I deposited 50. I will get 40. This will become 60. This 60 is what gets split into 35 and 65. This 60 is what gets split into 35 and 65. That 35-65 agriculture and business income split. Okay, so which means this deduction should be taken off before your agricultural income split. Should be taken before your agricultural income split. Yes or no? Yes or no? Yes. Section simply comes and says, take whatever money you have, deposit in a development account. Deposit in a development account. If you deposit some money in the development account, up to 40% of this can be allowed as a deduction if you do it before your agricultural income split. If you do it before your agricultural income split. Yes or no? Yes or no? Yes. Yes. Same way, there is another item. It is called as site restoration fund. What fund? Site restoration fund. This is generally created for petroleum and natural gas people. People who are engaged in petroleum or natural gas. Read the word. No, word says site restoration fund. Basically, what they're saying is people who extract petroleum and natural gas. No, they extract all the items and then they don't repair it. If they don't repair it, what will happen? Tomorrow there will no more be production there. So as a policy, what happens is we tell them, if you want to extract petrol, go ahead, extract petrol. But after you have completed extraction, level the field once again, so that tomorrow again petrol can develop. That is called as site restoration fund. Which means if you are in the business of creating petrol or natural gas, after you have utilized the place, if you are parking some money called as site restoration fund, which is going to help you to restore the place, whatever money you put in that site restoration fund, you can claim 20% of the PGBP as a deduction. Yes or no? Yes. So when you do a tea, coffee and rubber development, it is 40% of PGBP. If you're doing site restoration fund, it is 20% of the PGBP. Simple? Yes. Keep this in mind. Now the question is, Rahul, I deposited some money in this fund. What can I use this money for, Rahul? They are saying, boss, this money should only be used for the purpose I tell you. If you're thinking about tea, coffee, rubber and all, what do you think will be the money used for? It will be used for machinery and all. Site restoration will be used for restoring site. Yes. Rahul, I deposited money in this fund. Tomorrow after I got the deduction, I withdrew the money. And I'm using it for normal business. Do you think income tax will be happy? No. Income tax said, if I am telling you the purpose, follow the purpose. If you do not follow the purpose, if you violate my conditions, what deduction you claimed earlier will become taxable right now. Yes. Read. It says, amount deposited in development account or restoration account shall be utilized only for the purpose given in the scheme. Only for the purpose given in the scheme. Any amount withdrawn in any previous year should be utilized in the same year. I should not withdraw the money and come and say I will use it in the future. That year itself you have to utilize. That year itself you have to utilize. Where the amount is utilized as per the scheme for incurring revenue expenditure, such expenditure cannot be allowed as Pgbp. In simple words, Rahul, you should use this money only for capital expenditures. You should use this money only for capital expenditures. You cannot use this money for revenue expenditures. Yes, yes. Next, any amount deposited should not be utilized for the following purpose. Should not be utilized for the following purpose. Purpose number 1, I am saying it should not be used for installing machineries in your office premises. It should not be utilized for installing machinery in your office premises, which means you should only use it for installing machinery in factory. Rule number 2, I am saying you should not use it for any office appliances. Not use it for any office appliances except for one office appliance. They have approved computers. They have approved computers. They have someone said even if you take a computer for office purpose, even if you take a computer for office purpose, it is eligible as deduction. It is eligible as deduction. Please highlight this in your important pen. Please highlight this in your important pen. Please highlight it in your important pen. I am coming and saying that Rahul, whatever money is there in the fund, you should utilize it only for buying plant and machinery for capital nature, or for the purpose which is given in the scheme, If you want, you can also buy it for computers, even if the computer is used for office purpose. Next, I am coming and saying you should not buy any kind of plant and machinery on which you can claim 100% deduction. Last, I am coming and saying you should not buy it for, you should not buy for buying any plant and machinery which is installed for manufacturing some items which are prohibited. Like alcohol or tobacco. You should not purchase any plant and machinery which is going to violate the laws. Yes or no? Yes. So I am saying you put money in a fund. I will give you 40% for tea, coffee, rubber, 20% for site restoration fund. Money which I deposit should be used for specific purpose, should not be used for office purpose, should not be used for 100% deduction, should not be used for making prohibited products. In case you misutilize or non-utilize the money, the year in which you so misutilize or non-utilize, that year it will become an income. Yes. Then they are coming and saying if you planned to purchase any asset using this money, you should hold the asset for at least 8 years. If you hold the asset for at least 8 years, no problem. If you do not hold the asset for at least 8 years, if you sold the asset within a period of 8 years, whatever deduction you claimed, again that will be reversed. Yes. Why am I doing all this, people? I want to avoid people using undue benefit of it. Okay. I am giving this as a benefit for you to develop your account or to develop the site. Don't come and claim deduction in 1 year, start selling assets in the next year, then buy assets, then sell assets, then buy assets and then sell assets. You will lose the deduction. So they're putting some conditions. Don't put for office, use for at least 8 years and all those conditions. Yes or no? Yes. Exceptions, you can give the assets for sale within 8 years also if it is given to any government, local authority, statutory corporation or government. A government itself is coming and asking for the asset. Can you say no? No, you can't say no. So give it off. Next, any company which has received all assets and liabilities from the firm by way of succession. Basically, you are coming and saying company is decided to amalgamate. If obviously the company is amalgamating, what will happen? The assets will go to a new company. In that case, can you say the conditions are violated? No. You can come and say no problem, boss. The other person will take care of it. Because my company is stopping into existence, the other person will take the deduction. So don't restrict there. Last, they are coming and saying if any amount outstanding is withdrawn, I am telling you, you have withdrawn the money, use it for the purpose. If you are withdrawing the money but not using it for the purpose, I want reasons. They are saying if you find out that the reason is because the business is closed or because the firm is dissolved, then in that case, the year in which you withdraw, it will become taxable. The year in which you withdraw, it will become taxable, because the closure and dissolution is happening because of your choice, or is it happening because of a market force? It is happening because of your choice. You decided that you want to close. You decided that you want to dissolve. So in that case, the year in which you dissolve, it will become taxable. It will become taxable. If it is closing because the assessee died, because the HUF got partition, or because the company got liquidated, hey, this is something which you made a decision, or just because it happened? It happened. In that case, it is not taxable. In that case, it is not taxable because it is a genuine case. Because it is a genuine case. But all these conditions are there only for tea, coffee, and rubber development. It is there only for tea, coffee, and rubber development. It is not there for site restoration. It is not there for site restoration, which means in site restoration, if you withdraw the money, then in that case, and you don't utilize, I will tax everything for you. I will tax everything for you. I will not listen to you one single bit also. Whether the person dies, whether it is liquidated, it doesn't matter. It will be taxable. It will be taxable. Yes, this is what the section says. This is what the section says. Let's quickly revise the section in a simple manner. We are coming and saying that if you are into tea, coffee, rubber development, or you are into petroleum and natural gas site restoration, in that case, if you create a special fund called as tea, coffee, rubber development account, or you create a fund called as site restoration fund, whatever money you deposit in the fund can be claimed as a deduction, subject to a maximum of 40% for tea, coffee, rubber, and 20% for site restoration. The money which you put in that fund should be utilized only for purpose as per scheme, or you can use it for buying capital machineries. You can buy it for capital machineries, provided this machineries is used in factory. It is used in factory. You should not use this as money to buy machinery which is going to be used in office, for buying office appliances except computers, for buying any machinery which is 100% deducted, or for buying any machinery which is going to produce harmful products, If you violate all these conditions, the year in which you violate the conditions, the year it will become taxable. If you bought some assets from this machinery, you should hold the assets for 8 years. If you don't the assets for 8 years, it will become taxable. It will not be taxable if the assets are given to someone else because of amalgamation, or because government is asking. If you take out the money from the account because you decided to take out the money on account of closure or dissolution, it is taxable. If it is done because of a market force like liquidation, death, or partition, then in that case it is not taxable. Only for tea, coffee, and rubber, it is taxable for site restoration. Yes or no? Yes. Simple, straightforward example. Too much content, simple logic. Yes. Finally, they are coming and saying if you want to claim this deduction, every year you have to get a CA certificate. Not relevant for exam. Yes or no? Yes. Let's see one question quickly and then we can close for the day. Yes. Look at the question. It says G Limited is a company in which public are substantially interested. Basically means it's a public company. This company is engaged in the business of growing and manufacturing tea in India. If you are growing and manufacturing tea in India, your business income will be split into 40 and 60. 60 goes to agriculture. For the previous year ended 31st March 2023, its composite business profits before allowing deduction is 60 lakhs. They are saying that the Pgbp before claiming the deduction is 60 lakhs. On 1st September 2023, it deposited 11 lakhs in the tea development account. I told you if you want to deposit, you have to deposit by 30th September of the assessment year. Has he deposited by 30th September? Yes. He is deposited by 30th September. I don't think this is 23. I think it's 24. Change it. It is 1st September 24. Yes. So within 1st September 24, you have deposited the money of 11 lakhs. Can you claim the whole 11 lakhs, Rahul? Can you claim the whole 11 lakhs? Yes, because I can deposit 40%. 60 lakhs to 40% is 24 lakhs. I have only deposited 11 lakhs, which means it is within the limits. I will claim a deduction of 24 or 11 now. Will I claim deduction of 24 or 11? It is whichever is less. Maximum deduction is 40. I claimed only 11, so I will get only 11. Yes, it's saying I have put 11 lakhs into the fund. I put 11 lakhs into the fund. For the previous year 21-22, G had incurred a business loss of 14 lakhs. He has incurred a business loss of 14 lakhs. This is last year's loss. You can set off against your business income. Yes or no? You can set off against your business income. Hey, now question to you. This loss will be set off after doing that 40-60 or before doing that 40-60? Will it be set off after doing 40-60 or before doing 40-60? It will be set off after doing the 40-60. Why, Rahul? After doing 40-60? Because only 40 is taxable. No, 60 is anyway exempt. Why should I reduce losses from 60? Yes or no? I will only reduce it from 40. I will only reduce it from 40. Yes or no? Yes. So they're saying this balance business loss is 14 lakhs, which has been carried forward. On 21st March 2024. It withdrew. I think this is 23 only then. My bad. Because it's coming 24 here. If it's coming 24 here, then it's 23 only on the top. It doesn't matter. Both the numbers are same. I'm saying on 21st March 2024, I withdrew 10 lakhs from the deposit account, which is utilized as under. I withdrawn how much? I deposited how much? 11. I withdrew how much? 10. I withdrew 10. Now this 10 lakhs, if I withdrawn, I have to use it for the purpose which they tell. Let's look at if they've done. Yes, they're saying out of the 10 lakhs, 6 lakhs I purchased a non-depreciable asset as per the scheme. As per the scheme. As per the scheme, not as per the scheme. As per the scheme. Allowed, not allowed? Allowed. Therefore, no problem. Ignore. No problem, ignore. Next. 3 lakhs was used for purchasing machinery to be installed in office. Allowed, not allowed? Not allowed. Therefore, this will become an income. Very good. Then they're saying 1 lakh was spent for the purpose of the scheme on 5/4/2024. For the purpose of scheme. Allowed, not allowed? Allowed. Therefore, wait 1 second. Not allowed. Why? Notice, no. When did you buy? When did you withdraw? You withdrew on 24 January. I told you, if you have withdrawn money in the previous year, you have to utilize in the same previous year. Have you utilized in the same previous year? No. You have utilized in the next previous year. Therefore, it is not allowed. Both will become income. Yes or no? So therefore, your income will become 3 plus 1, 4 lakhs. Your income will become 4 lakhs. You are required to determine the business income of GA Limited and the tax consequences that may arise from the above transactions. For the assessment year 24-25. What will be the consequence if the asset which was purchased for 6 lakhs, is sold for 8 lakhs in April 24? I told you, any asset which you purchase, you have to hold it for a period of 8 years. The person has sold it in the next year itself. In that case, what will happen? The deduction which you claimed earlier will become income. Rahul, how to do this question? Simple. How to do this question? I will tell you what is my Pgbp first. What is my Pgbp? What is my Pgbp, people? They are saying my Pgbp is 60 lakhs. My Pgbp is 60 lakhs. Now, in this Pgbp, I am coming and saying that I have deposited how much? 11 lakhs. I have deposited 11 lakhs. Can I claim the whole 11 lakhs? Yes, because deduction is 40% of Pgbp or actual deposit, whichever is lower. 40% of Pgbp is 24 lakhs. Actual is 11 lakhs. Can I claim whichever is lower? Yes. So therefore, I will claim the whole 11 lakhs. Therefore, it becomes 49 lakhs. Yes or no? It becomes 49 lakhs. Now, in this 49 lakhs, Rahul, what is happening? I am telling that in this 49 lakhs, 60% will go to agriculture and 40% will go to business. Yes or no? So I am saying split into 40 and 60. 49 to 40% is sorry, 90 lakh, 19 lakh 60,000 is my PGBP, and balance is 29 lakh 40,000. So therefore my taxable PGBP is 19 lakh 60,000. Question comes and says I have a brought forward loss of 14 lakhs. I have a brought forward loss of 14 lakhs. So therefore I will reduce my brought forward loss. I'll reduce my brought forward loss. How much will I reduce? I will reduce 14 lakhs. Therefore my income will become 5 lakh 60,000. So therefore my PGBP taxable income is 5 lakh 60,000. My taxable agriculture income is 29 lakh 40,000. When I say taxable, I'm talking about partial integration. I'm talking about partial integration. In this question, the person is a company. The person is a company. If the person is a company, will partial integration apply? Not apply. Will not apply, which means this directly becomes exempt. This directly becomes exempt from tax. Yes or no? Yes. Now what will I write? I will come and say 6 lakhs is as per scheme, therefore not taxable. 3 lakhs is as per violation, therefore taxable. 1 lakhs is violation because it is after the year, therefore taxable. 6 lakhs if it is sold in the next year it will become taxable. That is what they have given. That is what they have given. Yes or no? Yes or no? Yes. So what will happen? The items which will become taxable is 3 lakhs and 1 lakh. The items which will become taxable is 3 lakhs and 1 lakhs, totally 4 lakhs. But understand, this 4 lakhs will be added to my business income. Will be added to my business income. If it is going to be added to my business income, again you will do 60 and 40. Again you will do 60 and 40. So out of that 4 lakhs, only 40% will become taxable, 60% will become not taxable. Will become not taxable. That's what they have given. See, computation of business income, they have said 6 lakhs is not taxable. 6 lakhs is not taxable. 3 lakhs is taxable. 1 lakh is also taxable because it is done next year. Total is 4 lakhs. In that 4 lakhs, 1 lakh 60,000 will become taxable. Balance 2 lakh 40,000 will become exempt. Balance 2 lakh 40,000 will become exempt. Computation of business income, you are saying 60 lakhs is my business composite income. 60 lakhs is my composite income. I told you can claim deposit or actual, whichever is, sorry, actual or 40%, whichever is lower. So you have reduced lower. You have reduced lower. Therefore 49 lakhs. Then you removed 60% because it is exempt. Number came as 19 lakh 60,000. In that you reduced 4 lakh. Therefore it became 15 lakh 60,000. Sorry, 5 lakh 60,000. 5 lakh 60,000. And here they are coming and saying, if at all you decide to sell the asset within 8 years, if you decide to sell the asset within 8 years, the item which you claimed as a deduction will be added as income. Will be added as income. So your PGBP income will become 6 lakhs. Your PGBP income will become 6 lakhs. But understand, like I told you, 6 lakhs will be added to your profits, which means again only 40% is taxable. So 2,40,000 will become taxable. 2,40,000 will become taxable. At the same time, since you have sold the asset, it will be called as capital gains. It will be called as capital gains. How do you compute capital gains, Rahul? Full value of consideration minus cost of acquisition. This will become your capital gains. Now, since you have sold the asset within 24 months, it will be called as short-term capital gains. It will be called as short-term capital gains. Yes or no? Yes or no? This is what your computational mechanism looks like. Yes, simple 2 sections: tea, coffee, rubber development and site restoration fund. Put the money in the account, you will get a deduction up to a maximum of 40%, 20%. Use it as per the scheme, no problem. Use it for office purpose, disallowed, added as income. Use it in the next year, added as income. Use it for any kind of office appliances, income. Use it for 100% deduction, income. Use it for any product which is harmful, income. These are all your income statements. Simple sections. Read it once at home. Read it once at home. For tomorrow's class, complete depreciation, complete these 2 sections. Complete depreciation and complete these 2 sections. After this, PGBP is simple. After this, PGBP is simple. Every section has small lines. Okay. So every section will do one line. Section is over. Section is over. The chapter will automatically get over. Okay. After this, you have no complicated sections in PGBP. We can easily complete it off. But please prepare this income. Next class, 2 more classes we will be done with PGBP. Third class we will do sums. Third class we will do sums. Yes, everyone. Yes. Yes. All right, perfect. Thank you, people. Have a great weekend.